right, I'm live this time. Apologize out there. Having problems getting online right now. Having some getting online issues this morning. I don't know if like a million people are jamming the login button, maybe. Yeah, sorry about that this morning. I'm having some issues getting online this morning. I had some microphone issues, but now I'm having some live stream issues. Dude, what is going on with come on now. Come on, get online. Good morning, baby. What's cracking out there? Good morning, FOMC day, baby. Huge day for people. All right, so actually have a lot. I got a ton of shit I got to put up because we have some issues this morning with what? We have issues this morning with. I had to turn my entire computer off. I was trying to put on a new microphone for today. I don't know why I was doing it right before. I was doing it right before FOMC rate decision. And I probably shouldn't have been doing that. Please tell me. Oh, nice. Good morning out there. How is everybody doing? Good morning. We're going to take so I got a few things. So last night after the show, I got a new, I have a microphone and a new arm and all kinds of cool stuff. And I was waiting on, I got the wrong XLR cable. So I had a cable delivered yesterday and I put a new microphone in for FOMC. What's going on over here? Sorry, I'm having some, and you can see you can actually see back here, I'm having issues with my monitor in the back here. Hold on. Hang tight 1 second here. I tried to get on as quick as I could no matter what, right? It's FOMC day. So I tried to put in a microphone last night, and it is wreaking havoc on my system now. An audio interface so I've got a daisy chained computer system, and daisy chaining them, I have to, this new XLR mic has to be like connected to two different computers and stuff like that. So I'm just having issues this morning. I apologize for that. In that same vein this morning, I don't have a bunch of, I had to reset my computers, so bear with me as I get charts up for you this morning as you prepare for the day. Now, we do have some housekeeping that we have to do. We're going to have a little fireside chat here. Hold on 1 second here. So, yesterday afternoon, okay, there's a few things we got to look at. Number one is, let's go to the opening bell position. So yesterday in yesterday's brief, or not yesterday's brief, and Monday night's brief, you got a chart that looks like this right here from me, okay? And you caught a brief from me on Monday night for Tuesday, and on Tuesday the expectation was this path right here. that we would slam down into 403, which is this bar right here at 4 p.m. This is actually after 4 p.m. This bar right here is after 4 p.m. Now, I don't know. I feel bad because yesterday there was a lot of, I want to say there was a lot of emotion or upset. People are upset in the stream. People were probably losing their asses yesterday. But we went over yesterday the brief from the night before. The market brief from Monday we went over in the morning. So there was no expectation yesterday of going up. There was an expectation of going down yesterday into the close. As a matter of fact, that's the last hour bar between 3 and 4 p.m. Right down inside of here. This is the last one right here. Now we did come back up and then blast straight down into 415. But it does raise some concerns for me. The first concern is we don't often, at the end of after blasting down like we did yesterday, right? Now, number one, this is the expected move down into yesterday, right? So I don't know who out there can or is telling you, hey, we're going to go down on Tuesday, right? This is the 3 p.m. bar right there. This is the 4 p.m. bar right here. Or the 3 to 4 p.m. bar is right here. I don't know who's out there telling you the expectations for your next day and getting it that correct. I don't think anybody is. That's what I'm going to tell you. I'm going to tell you right now, nobody is. Nobody's telling you on Monday what to expect on Tuesday and having it exactly trade like that. But that's what you got. And then yesterday morning, we showed it to the market brief before the day began. So there shouldn't have been any issues there. Now, trying to buy that close yesterday, we're going to talk about that as well. So I wound up buying a bunch of calls for May 3rd, but I also bought a bunch of zero dates for the bounce into the bell that was expected yesterday. And I got torched on those zero dates yesterday. But to that point, though, the chat yesterday, I have to comment on this because it's to me it's kind of crazy. I think we have an audience that gets the briefs, is in the Discord, and knows this stuff, right? So from the chat yesterday, we get people that know about this going to happen here, right? And then we get people that did not pay attention to the market brief yesterday morning from Monday night. They either weren't here or they just didn't give a fuck and didn't listen or read or pay attention or even follow the brief into yesterday's stream. So that's an issue. And then the last issue would be that there are free viewers out there, free viewers that do not support the show, do not support the Discord or the or read the briefs or any of that kind of stuff. And then they are inside our chat, and they don't give a fuck, right? And so if we could continue to go down like we did into the bell yesterday, they're getting banged up. There should have been no reason to be that hurt yesterday on this down move, especially in the larger picture. We're making like 90% killer trades here. So if you've got one bad trade, we have an issue, right? If you've got one bad trade that hurts that much, there's some mechanical issues going on. We're either doubling down, tripling down. You're trading 100% of your count, 50% of your count in a trade. Maybe you're just gambling zero dates on this, and that is the only trading that you do. Maybe you're a bull and you're like, hey, I'm just going to wait till we get to the bottom and catch the bottom up. And only catch that because I'm a bull, right? But even if you are just a bull, if you read the nightly briefs every night, the market briefs, and specifically the past 2 weeks, we've been in a correction, right? As a matter of fact, the Monday brief and the Sunday brief have been very detailed, letting you know that we are still in a corrective environment and have not left it. which means that we are in a sell the rip environment, right? We do not move back into a buy the dip environment until we end the correction and confirm that end of correction. And you all know out there, anyone that's got the briefs, that's a member, that you are not in safety until we return to that. Confirm the end of a correction. We're back in a buy the dip environment. And I want to also point one more thing out to you, which was on Monday's close. On Monday's close, I said I did not like that close before the end of that stream. And a lot of this chat here, I read the chat for Monday, loved the close and thought we were going up. So we have to find a way at some point to kind of separate people that get the briefs, people that are part of the Discord, and people that are members, because there's cross-chat counter alpha in general. Of 10 trades or 10 expectations, if you have one small down move like this into the bell, which is unexpected, that's actually not unexpected. Went back and looked, and I remember one last time on the 30th that this actually happened. We have one more example of this, I want to say in February or March of 2023 on an end of the month. We did get a 30-point drop. It was a 30-point drop on the last day of the month. It was either 2023 or 2022. We had a 30-point drop right into the end of the month. Matter of fact, we sat around for it on stream until it happened because we were like, it's going to come down and slam down there into that close. Now, hold on one second here. Close that up. We're going to delete this right here. And what I'm going to do is this. Due to yesterday, right, I'm not going to tell you what the market brief was last night. I feel like I'm giving that shit away for free in the mornings. And I'm not going to give it away for free anymore. So you either sign up for those market briefs or you just hang out in the background. You're just going to be out there without any kind of freebies from me for market briefs anymore. You're going to need to sign up for them so that you can see what the expectations are day in and day out at this point. So we're going to play that game for the next few days here, get through FOMC, get through the rest of the week, and you'll have to ask people that are members what's actually going on in the marketplace because they already know. They're the ones that are taking the time out to read those briefs. Those are the people that are paying attention. Those are the people that are learning the system and how to trade it. And I can't have people in my chat at 3 o'clock in the afternoon that are not paying attention, right? Not following the trading rules, taking on too much risk for themselves. Do you got what I'm saying here? And I want to explain this better because 2 weeks ago on a Friday or something, Winky and I were loading up. I was loading up on fucking like massive shit, hundreds of thousands of dollars in the marketplace. And then I've got some guy in my chat yesterday that mishears me say 36 cents, which was 26 cents in the chat. And he's pissy. And he's pissy probably because I made $120,000 like a week or two ago. And says, I'm trying to keep you honest, but they don't take all the trades with me. They take the 0 dates, and that's the only trade they take. And so they're gambling inside my fucking stream. I don't fucking care if you gamble inside my stream. I don't want you to gamble inside my stream, but do not take the trades that I take. Follow me on the trades that I take and then pick the choice ones or the highest gambling ones, burn them to the ground and say, I fucked up, Cap. I'm kicking a can down the street. Can't have that in my stream. That's also why we stopped trading 1 minute trades. This is why we stopped trading trades like this. We used to on this stream take trades that were like this long, really fast, right? We'd get in and out, right? In and out, in and out, in and out. We'd get in and out of trades, and people couldn't keep up. You'd be buying a call for 5 cents. You'd be selling it at 10 cents. They'd be entering it at 10 cents. It wouldn't go to 15 cents, then it'd get torched. So we can either slow the stream down for you. We can do that. If you want me to do that, I can change it to a higher frame, an hour, 30 minutes, something like that. We just won't look at the 1 minute chart. Or or I just don't call trades anymore for myself. I'm not going to tell you what I trade for a period of time, at least a week or two or something like that. The last option would be that we take the chat private. Maybe I can try to input a chat from somewhere else. And if you're a member in the Discord, we do a Discord chat and I stream it across the stream. That way we just have people that are not members, not supporters, don't support what we're doing here for the fucking hours that we put in. Not the nonstop working hours to bring you guys serious research into every day. So we could possibly do that too, where we just shut down the Twitch chat, we shut down the YouTube chat. And if you're a member, I can do a little screener or something where we just show the chat from Discord. So if you want to participate, I know exactly who you are. I know that you're getting the briefs every day. We're not getting fucking counter alpha inside of our chat. So let me know what you guys think out there on that, because we're not going to do this. I can't do, like, the one thing I can't do, the one thing that drives me batty right now is I love bulls. I'm a fucking bull. I love them. But what I can't have inside my chat, right, is a bull trying to call a bottom and torching themselves for a week, 2 weeks, 3 weeks during a correction, especially when I'm inside. Every night I'm writing a note to bulls saying, every night at the end of my brief, at the bottom, I write a note and I say, we're still in a correction. We're still in a correction. Joe Donut, of all people out there, has come on this show and inside Discord at times and have said to people, is it price, hourly trigger, and daily trigger yet with a back test and a new high? No? Then don't be fucking buying dips. It's that simple for bulls. It really is. And what bulls end up doing is, it's just like a one big long fight all the way down. Even when you tell them, you're like, hey, we're going to roll down tomorrow 100 fucking points. We're rolling down tomorrow 100 points. There's a bull trap. I actually posted that in Discord 2 nights ago on Monday. I go, there's a bull trap tomorrow morning. They're going to fucking trap you and burn it to the ground 100 points. Right? And I'm sure that there were traders out there yesterday that fought that fucking 100 points the entire way to the bottom. I just can't have it. I can't have bulls doing that in my stream, man. It's killing me. I felt like I was carrying like 1,000,000 pounds last night into this morning. I'm like, what am I going to do here? And I'm not going to post the market brief on the show in the morning anymore because I'm assuming that nobody's listening or reading. That's free, right? If you're free, if you're like, hey, I'm watching the show, I put a market brief up this morning, review, fuck him, or I'll show up at 3 o'clock in the afternoon and try to wing it or something like that. We just can't have it. So we're not going to do it because the rest of the membership is killing it right now. They're murdering it. Straight up, they're killing it out there. No. You're not being punished. You're not being punished. It takes a lot of time. It takes a ton of time and research and energy to get this stuff together for you. It takes me hours. We close this. We're doing this show now 5 days a week, right? 9:30 in the morning until 4:30. Then we do ERs right now until what? 5:30 in the afternoon, 6 p.m. 5 days a week, right? If I'm not here, the stream is still up. So no, I'm not trying to punish anyone that's a free member or free user in any way, shape, or form. But it really does matter that you are in our Discord. It matters that you're getting the market briefs every day because you're only getting half a scene or half a picture. You get what I'm saying? So, like, if you're a free member, you've got half a story. You walk into a morning with us with a half a story, right? And it's important for that complete picture, to get that complete picture every day. And especially if something goes the wrong way, that you can anticipate it going the wrong way. If I get something wrong, if I get a nightly brief wrong, I want you to be able to see or be able to say, hey, look, we're expecting this here. We're expecting a day like this here, and it just broke that trend, and you're already prepared. Does that make sense? So we got to find a solution. I don't know what the solution is, but we're going to find one. I don't know what it is. I don't know if it's better moderation. Maybe it's better moderation. Maybe it's a private chat. We do the public stream. We just do a private chat. We got to find a way around it. Yeah. So that's it. And I'm telling you what, it's $32 a month. That's what it is. $32 a month. It's dirt cheap. Especially in today's day and age, $30 is dirt cheap. And if that doesn't work for you, if you're like, hey, I can't afford $30 a month, you can always ask someone to share with you. If I was a free member and I couldn't afford $32 a month, I would just be in the chat. I'd make a friend and say, hey, man, can you send it to me every night? That's the only other option I would think that you have. So otherwise, at that point, to that point, though, we're going to try out some different systems this week and see what happens. So let's start with the first thing. Here. I'm going to come right into the first part here. Hold on 1 second here. Good morning, by the way. Hope you're all doing well. Otherwise, so I'm going to show you guys a few things that are going on in the background. Number one, we should rip faces off today. I don't know if you know that. So I'm not gonna tell you. I'm not gonna show you the brief anymore. We should rip some faces off today. I'm gonna explain that reasoning why. We have an example of yesterday, and what should happen. That we should fucking move to the upside today and tomorrow. Personally, I'm expecting like a 100-point move between today and tomorrow to the upside. Now, they're likely, if we get that 100-point move to the upside, they're likely going to sell this fucker down Thursday close into Friday. We're going to talk about that and why that's going to happen, how it's going to happen, and that kind of stuff. So for FOMC, if you are wondering, I'm not a complete asshole. I'm just trying to blow off some steam here, but the expectation today is that we go up in a big way. Now, so anyways, we should go down for the start of the morning, but then rip some fucking faces off in a major fucking way. We should move to the upside today, tomorrow, and then Friday we should burn. And I'm going to show you the last time how that happened, how it worked itself out. This should be a non-event today for you unless we get a rate hike or a rate cut. Should be a non-event. I know, I'm like, yeah, just steal it from me. Steal the market brief. I mean, what the fuck's wrong with you? You poor? Steal the fucking market brief. Find a way. Okay, so we got a bunch of stuff to go over. So bear with me as we roll this stuff out for you this morning. We have a lot to go over, a fuck ton to go over this morning. Yeah, and I realize that. There's going to be people on chat. We're going to get, one of the things about streaming, FX Retracer, so I'm not reading all the chat right now, but FX Retracer just made a good comment. I did read it. You're always going to get hit and run people. I do realize that you're going to get emotional if you're getting torched. I get emotional. I was upset yesterday after the stream. I burned a ton of money yesterday. And I've got a trade still on for the third that's bleeding like a motherfucker right now. Sorry to swear. Bleeding like a motherfucker right now. So I'm not happy either, right? I'm not happy with my trading at the end of the day yesterday at all, right? Well, I am. I don't think the end of day could have really been counted for yesterday. We're going to look at that this morning too. The last time that happened, and the reason that I'm saying that is because this guy right here, Vic Niederhofer, right? Vic Niederhofer went on Twitter and said this has never happened before. There's one other example, and it's in recent history. So I'm going to show it to you guys. I've shown it to you in the past on this show, but I'm going to show it to you again this morning if we have the time. The last time that it actually did happen. Okay. So yeah, so few things. Emotions run high when you're getting beat, right? You're losing, it hurts. Number 2, if you are going to lose, yesterday was an awesome way to lose. So if you're mostly a winning trader, so I was like angry after the stream yesterday, right? And then as the day progressed, I ended up making some steaks and stuff. I didn't go to fucking Wendy's. I made steaks for the family last night. But as the day was done, I was like, I looked at the price action. I actually replayed the price action yesterday, and I was like, nah, I should have cut my losses on the first roll down off the 1 and 5 minute trigger. But then I was like, if I was going to lose a trade, that was probably a fucking epic one to lose. So I was like, man, not a bad day. I'll take that L. Because I'm like, I probably, if I'd been a little bit more conservative, I would have gotten out before that happened. But I was pretty fucking aggressive into that close. And the way that I lost yesterday, I'm like, yeah, it's not so bad. I'd like to go down losing like that rather than something more trivial. So I'll take that L as a good thing, not a bad thing, into late last night. There's another thing, though, which is what FX Retracer just said. You're going to get people in our chat that just show up and get not just emotional, hit and run commentators and stuff like that. People that just show up and want to chat for just a moment and that kind of stuff. So we're gonna do 2 things right now. The first thing we're gonna do is this. We're gonna go right here, and the first thing we're gonna do here. We're going to make this really simple. I can fix this morning. Fix part of this morning. Hold on here. I'm going to fix part of this morning. Who wants to be a moderator on YouTube? Tell me, as a matter of fact, this is kind of hilarious. On YouTube, who wants to be a moderator? Let me know on YouTube who wants to be a moderator. Tell me in the chat, and I will moderate you. I'll make you a moderator. Oh, as a matter of fact, hold on. I'm going to do something else really cool here. Give me a second here. I got to do something else cool. I'm going to open up the chat on YouTube this morning. Hang tight here. Give me a second here. To just subscribers, because it is Fed Day, right? You want to talk on Fed Day, don't you? Hold on here. Okay, so if you click subscribe, it's free on YouTube. So if you want to be a moderator, Stacy wants to be a moderator. Fuck yeah, Stacy. Stacy's a moderator. Boom. She's a moderator now. Done. Who else wants to be a moderator? FX Retracer. Got you. Done. That is moderator. Save. Mary Garrison, what's going on out there? What up, Grubster? Grubster, you're a moderator now. Done. We can solve this quick. Where's hold on, I'm trying here. Hold on. You guys are Jared King Rombald, what's up, brother? Whoa, you guys are so fast. That is moderator. Done. Save. What else we got in here? You guys, too many people asking me moderators right now. What else we got here? What up, Ricky T? What's up, Andre? Hold on 1 second, boys and girls. Stonks Anonymous, what's going on with you? You're a moderator. Boom. Standard moderator. What do we got here? I got you, Stonks Anonymous. You guys are too many people. I would not like to be a moderator. John Haggerty, you're already a moderator, aren't you? I think you already are. Okay, I think I got everybody. I think I got a bunch here for right now. It's good enough for right now. What else is going on out there? Hold on 1 second here. I think I got enough. I think I just put a bunch there. Now we're going to go over to, so the chat is open for the day on YouTube. If you're joining us right now and you're watching us on YouTube, chat is open because it is FOMC, and I do like to open up the chat on important days like today, especially if you're not a member. that you get to have your piece to chat in our chat. Whoa. Blissowitz, you're a moderator, aren't you? Oh, Blissowitz, my brother. Bam, done. All right. If I didn't pick as moderator, apologize. Not that I don't want you to be a moderator. I think I got enough. I think I have plenty at this point. I appreciate you offering. If I can only bring on so many, they give me a limit. But if I do have more chance to make you a moderator, I will in the future. All right. So now we're gonna go to Twitch. Switch over to Twitch really quick. We're gonna add some moderators to Twitch. If you want to be a moderator, on Twitch, make yourself known, and I'll see if I know who you are. Yeah, whoa, hold on, slow down. What do we got here? Hold on here. Hold on 1 second here. There you go. Knocking Futz, what's going on with you? Too many people here. Dude, things going crazy here. Big balls, baby. Big A balls. Aren't you already a moderator? No? You're modded. Sam, you got a band hammer or not? Sam, you're really a nice guy. I think where's Sam at? Oh, what up, legend? What up, legend? Hold on, legend. There we go. Hold on a second here. Mod legend X22X done. I'm trying to see names here. H-bomb, what's going on, my brother? Boom, right there. You guys all know who you are. You're like, oh yeah, he's gonna mod H-bomb definitely. Done. Hold on here. Harushi, what's going on, baby? Mod Harushi, done. Harushi's out there. All right, hold on, let's see. Oh, I can't see everybody's name here. Chat paused. Let's get weird together. I love that name. It's a good name. Oda Nubunga. You're already a moderator, aren't you, Oda Nubunga? You're a moderator, aren't you? Oh, dude, Oda Nubunga, you're a moderator. Dude, front row, where are you at? Front row, yeah, you're in there. I see you, front row. Are you already a moderator? I thought you were. Dude, I can't believe I forgot I had to get rid of mods. Big Ball said it's time to. Yeah, where's Uncle JBJ at? Jared King Rumbald. Where Jared King? Hold on here. Trying to look for people. Oh yeah, where's Bullshit? There's You guys are going so fast. Bullshit. Oh no, I think I made you a moderator. Unless I might have removed Bullshit by accident. I'm not sure. All right, it's a lot of responsibility. It's not easy responsibility. It's hard responsibility. It's not easy. Okay. There we go. Did I get everybody? I think I got a bunch here. I think I got a bunch for right now. We'll see how this works. They only allow me to have so many. So what I'll do is I'm going to add a block right now, and maybe we'll add a block later on because I'm not expecting everybody to be here every single day. So we're going to add some more. Give me have some patience, and I'll add more as time goes on. We'll see how this works for right now. What do we got here? Chat is paused again. I keep pausing the chat for some reason. I think I got a bunch here. I think I got a bunch. Okay. Who's Ruffles here? Who's this Ruffles guy? Ruffles wants to be a where's Ruffles? We're gonna moderate him. Where's he at? Ruffles wants to be a moderator. He's throwing down the years shit. All right, Ruffles, you're on board. I never see you chatting. Okay, so we're going to switch up. Okay, don't go crazy now. Don't break out the band hammer and go crazy with people. They've got a timeout button for 3 days. And try to keep the chat on message when we need it on message. Now, there's a time to fuck around, and there's a time when you got to keep the chat on message. Or not on message, but on, what's going on, right? Can't have shit posting at the worst fucking possible times as I'm burning thousands of dollars in my chat. Yeah, I think I made Ruffles a moderator. I just play Twitch blocker. Where's Uncle JBJ? Where's his ass at? He's always in the background hiding and shit. He's a moderator now. He's always creeping around Twitter and shit. Poke the juice box. What about you? You're a moderator too. Are you a moderator? You're a moderator now. Done. Uncle JBJ is going to be like, I don't want to be a moderator, Cappy. Fuck you. All right, let's get back into business here. Woo! Oh, shit, am I losing the stream? God damn it. Hold on a second here. Yeah, I'm losing the stream. Hold on here. Hang tight 1 second here. Please come on back. Please come back, baby. All right, is that might be back. That might be back. Now I'm getting kicked out of Tasty. All right, fuck you then, Tasty Trade. All right. I'm having some weird no, it's on my end. It's on my end. I had a bunch of stuff happening, or I have a bunch of try to install an XLR microphone with an audio interface last night, and that shit was not happy. It was like, fuck you, buddy. And I was like, okay. And so what I have is I've got a new XLR microphone with an audio interface, and then I use a virtual audio cable as well. And I use a Marvel GQX or GXQ virtual sound mixer. And then I've got 2 computers daisy chained with like 8 monitors, a bunch of video cards, rebroadcasting signals so that I can get you guys a signal before it happens. It's a clusterfuck in the background, to be honest. I don't know if an AV guy could help me, but I think if an AV guy looked and saw my setup, he'd be like, what the fuck are you doing? Because what I'm trying to do is not easy. Or what I try to do, what you guys get on the screen is not easy for a home setup. It's like bordering on a professional setup. It isn't one, but it's bordering on it because of what you guys see. Between the audio, the visual, the different line inputs, the fucking you got 3 charts on the screen right now. You got a A7000 with video. You've got microphones. Then you've got audio running in the background and video running in the background as the day progresses. So it's a pain in the ass. And my computer right now is like, I don't fucking like this new setup. which is fine. I guess I'll do it over the weekend, I guess. Not on FOMC day. I tried. It's just been sitting here for like 4 fucking weeks, and I'm waiting for one. Or I got the wrong cable, and then I got a new cable, and then it finally came in yesterday. And I'm like, we're gonna do this. Okay, so we got a bunch to go over. We got a ton to go over. Give me one brief second. We're going to go over a bunch of stuff here. We're going to talk about some important stuff here. Hold on.
7.265 million, a build of 7.265 million, and then for distiller, that's a draw of 732,000. Gasoline, a build of 344,000. Refining utilization at minus 1%, and then Cushing, that's a build of 1.089 million. So for the headline, that was an unexpected build, and a larger build than that of the private inventories last night. Distillate, that was a larger expected draw, but shallower than that of the private inventories last night. Gasoline, an unexpected build compared to a rather sizable draw in the privates. And then Cushing, that was a build against a draw last night in the private inventories. So relatively contrasting sets of data there between private and the headline. In terms of market reaction, did see a little bit of a downtick in WTI, but ultimately contained within recent ranges, most likely going off the back of that build in the headline. Still looking out for the weekly production figure.
Give me one quick second. I'm going to set some stuff up for you. And we're going to talk. We're going to do some talking here. We're going to do some blabbing. We're going to set up the. We're going to set up this morning the FOMC meeting.
2053, 1.5% gilt. That'll take place via May the 8th via auction. Crude production, that's unchanged on the week at 13.1 million barrels per day.
Give me one quick second here. I hope I got this. Okay. Cool.
And just seeing the latest OPEC survey from Bloomberg, they show April crude output relatively steady, falling 50,000 barrels per day to 26.81 million.
All right, we're going to take a look at, I told you I'm not going to show you the market brief, but I'm going to show it to you, okay, for this morning. Now, this is from last night, last night's market brief, and we're going to take a quick peek at that right now. Can we take a quick peek at that right now? All right, so we're going to make that small right now so you guys can read this. Main Street hat versus Wall Street hat. It's moments like these when anyone that did not grow up with a golden spoon in their mouth smirks that the economy is more robust than is led on by internet echo chambers, as could be seen this morning with employment cost index. Now, I shared this employment cost index link with you yesterday morning. Matter of fact, we started the show yesterday morning with this article that I linked from Bloomberg. The stock market, on the other hand, demands the golden spoon and all of its cocaine, or else it is going to rage. Corporate America, and in turn Wall Street, would have you work for free if it could squeeze every last penny of profit. And that was evident in this morning's numbers. Putting on my Main Street hat for a moment, congratulations, you poors. By the way, the S/ is sarcasm. You got one over on the greedy, greasy-handed old men with all the power and money. We wish that this was actually the case, though, right? As I bet a lot of you, even with perceived money, still feel the pain of inflation in decades of wage stagflation. I did post a link to a video for you in this market brief discussing a trader who discusses the greed of Wall Street and people in power. All right, put your Wall Street hat back on, right? Now, we already saw today coming. This was yesterday. Into yesterday's close and deep dived into it in last night's brief. Big money selling, as last night's curve and price actions charts showed. This was in the brief from the prior night. And to that point, at the end of the day, they did not care if we hit 503. They wanted 500 on SPY. Some serious lows on many significant symbols across the market and left none of the major reports ungroped. I think Amazon could have announced that they solved free energy and it would not have mattered. And lastly, of note, they were not taking any chances down the road with Apple's report later in the week, draining it right into the close. Many were awestruck, including myself. The good news, none of you nor I was caught in the heavy selling to the bottom. Most of us made bank on the selling, though I and at least a few others got caught end of day trading zero dates in anticipation of earnings. That's hurt. That hurt a lot of us out there. Hurt people in the chat. Hurt a lot of traders across the market. Then I went on to say, don't get too down on yourself. Imagine if you came in today getting long. This was yesterday, right? So imagine getting long into yesterday. Then you bought the close and were long from weeks ago on reports that triggered your stops yesterday. So imagine being long from Amazon from the bottom tick from a few weeks ago and being brought right back to that bottom tick on an otherwise outstanding report on expectations that were ridiculous. 12% year-over-year profit expectation on Q1 reports is ridiculous. Feel bad for those investors and traders that did those things yesterday. They got hammered yesterday. We don't want to lose. We don't want to lose the essence of people that got destroyed yesterday in more ways than one. They got really groped. And the lesson here is to remember, as long as you get 7 out of 9, 7 or 9 out of 10 right, end of day yesterday was an epic way to lose. And then I wrote, having fun yet? Well, today was only Tuesday. We have 3 more sessions left. Now, we knew last week was going to be crazy, and we also updated you on Sunday that this week would be more crazier than even last week. So this is a play on that same topic. Expect inflation to be the new under the microscope topic. More on that later. But take note that PPI is on Tuesday, May 14th, and CPI follows this time. That was noted by Volatility Wiz yesterday, that CPI comes in after PPI. He added some SPX call calendars in anticipation, opening a sell 5100 SPX May 15th call, buy 5100 SPX May 15th call for a net debit of 6 to 620. He got a fill at 605. If you like the vol trade, but I would wait until Friday and Monday for the sell and buy side, respectively. See the rest of the note below. I'm going to talk about that in just a minute. On the yield front, the 2-year yield broke out to its highest level since November. Here is a link to an article that discusses the belly trade of the 2s and 5s instead of the 10s and 30s. Now, I'm going to give you guys the links here in the chat in just a few minutes to all of this stuff. As for Gamma today's action, in my commentary and stream, while looking at the Gamma chart, remember we were looking at the Gamma chart yesterday and said to you, they don't want to close that gap and come back. It's an excuse for more down after. We're going to show that right now. I'm going to show that to you. We're going to switch over. I'm going to show that to you right now. If you remember yesterday on stream, the argument in stream was, hey, let's just go back down and close that gap and we'll come right back up, right? And we didn't do that, did we? We didn't come back down here, close the gap, and shoot back up, did we? They said, you know what? How about fuck you, we're going down farther. This dropped us into some pretty severe negative gamma in the market. This is not what, remember how it's like yesterday morning, we're like, yeah, we'll come down here and everything will be fine, right? Sorry about that. But what wound up happening is, hey, Cap, let's just close that little bit of gap down here. And that's not how it goes, does it? They rip you down, and then they continue to take you downtown for more downside action. And this is not good, is it? This is pretty bad and ugly. Another insight here. Let me bring this back up again. Another insight: the at-the-money vol curve is not moving higher, disregarding tomorrow's FOMC. Not moving higher, disregarding tomorrow's FOMC. Instead, with sights on Friday's NFP print. Also note that vol crushes on Monday anticipate more vol not priced in as we approach PPI and CPI prints. Maybe look for the vol whiz trade on Monday. Okay, so here are the corresponding charts. This gamma did not matter before yesterday. It matters now, doesn't it? This put gamma is now in focus all the way down to 4,700. 4,700. Remember that 4,700 with me, okay? I want you to remember this because I'm going to show you a period of time back in March, I believe, of 2023, and why this may come into focus down the road. Not today, but down the road. We're going to talk about that in just a little bit. Now, this is not in the brief, but it's going to probably be in a brief tomorrow or the next day, why that's relevant. SPX net gamma history. Now, I want to point out one part of this. In stream, we knew every day last Friday, Monday, we kept noting on stream and in market briefs that we were failing to get new highs. By the end of the day, right? They'd sell the open probably. I think like Friday they sold the open. We creeped and crawled our way back. Jimmy Barry has been making the same note, right? We're not getting above 510.75. We're not getting above 509.50 or whatever. And you can actually see that represented here, that weakness by bulls and the fact that we're not confirming the end of a correction and what is actually taking place. We're getting down moves that are bringing in put gamma into the market, major put gamma into the market. Now let's take a look at the at-the-money vol curve here. So this is FOMC day. This is today. Not much expected today, right? And I asked you all yesterday in stream an important question. I asked you guys in stream, are we going to get a rate cut, a rate hike, or nothing? And the overwhelming expectation was nothing. No rate hike, no rate cut. That the most important thing that would happen today would be the Fed speak today, right? So the vol curve could go up. Well, the vol curve of VIX could still rocket ship if we were to get a rate hike. But the expectation, at least, is that today is a nothing burger. Now, for NFP, a vol curve going up, right? So if we get an upside of a no, if we don't have anything that ruffles the feathers today, we could go up in the market. And then heading into Thursday, or Thursday close, there'll be some panic for a ramp in volatility into Friday. Monday, volatility is expected to dump. Now, this is the big question over here. PPI and CPI, volatility is not being priced in, even though volatility remains elevated. So if you wanted to look for a trade where you're buying and selling volatility, right? If you're looking for that volatility trade, you'd be looking to sell volatility, right? On Friday close. And then if this is not priced in yet, you'd be buying volatility on Monday for a ramp into those PPI and CPI prints on the 15th and 16th of the month. Now it's making more sense, right? So you're selling volatility in a calendar trade, buying volatility in a calendar trade that ends after the 15th and 16th. The most important of which will be on the 16th and not the 15th, because we have a reversal of the PPI and CPI numbers. So where does that leave you? I would say faring very, very well. We expected lots of data, world reports, speakers, and wild-ass swings. We knew buyers were weak, and we knew the correction was not over. We've anticipated 90% of the moves, and more importantly, cautious approach should have left most traders well off or not getting too knocked around too much in environments best left not traded the last 2 weeks, as noted in reports. So the recommendation from here and forward is what? Stay focused the rest of the week using the tools that you've learned, as there is a lot more volatility ahead, as is shown in the SPX at the money vol curve. When you feel overwhelmed, get off smaller time frame charts and look at higher frames. Most of yesterday's action was expected. Remember that we are in negative gamma now, right? And specifically that big move down end of day put us into deep negative gamma, as we did not retrace at all end of day, which means dealers will buy futures but will also chase both buying and selling during market hours, amplifying moves up and down while deep in negative gamma. And as for FOMC, the vol curve is pricing in what you confirmed for me when I asked you on stream yesterday. I already talked about this above, so we're not going to rehash that. Now, expectations for today. Expectations for today on SPOOs. Slight down move today. Maybe some panic or negativity as we head into the 2 o'clock and 2:30 hour, followed by a rip up to 504, 506, and I think into Thursday at some point before the NFP print, an upside move. Now, this is predicated upon no rate hike, no rate cuts, no vicious, hawkish Fed Powell, none of that shit. Now, if we get some of that shit, right, we come down, right, we cool off, and then we get into 2 p.m., and then we get the presser, and Jerome gets nasty, you could see that more downside to come. That's that 492 level down here. One other note we're going to talk about later on is I want you to recall, I have a note at the end of this brief that I want you to look at, and that is we still have not put in a lower low on major time frames. We still are at a higher low right here. So if you are a bull, even with this extension down yesterday, you didn't go down here, did you? Higher low, higher low, higher low, still intact. So if you are a bull, your bull thesis is still kind of intact here. What you do not want to see today, though, is what? You do not want to see any weakness make a new low, do you? You don't want to see Fed Chair Powell say anything that would make a new low either, do you? So if you're a bull, you need to be paying very close attention today. Very close attention to what? Any kind of new low down here or down here. Pay very close attention to this today. Extreme close attention to this today, because this is going to be an indicator to you that we have a major correction coming, likely down to the monthly trigger at best. At best. Forget the weekly trigger down here. We're going to be talking about some major downside to come. 480, 485 at minimum. At minimum. QQQs, similar expectation up here. Trade above to 428. A little bit of downside move into the rate decision, and then look for a pullback on the actual Fed presser. IWM. We've talked extensively about this one. As a matter of fact, this one got hammered yesterday, a little bit deeper than expected. I think yesterday's expectation was that we'd move to right here and then come back up. We have actually blasted down, but we did make a note in the brief, and I made it again last night, and I want to say this to you. It's very important. Same as previous notes, any news of rate hikes and downside moves will be amplified on smalls. Expect smalls to trade like a meme stock because of how sensitive it is. Now, it'll still follow the same path. Let's say SPY is following. Let's say this is SPY's path, right? Smalls would act like this. bigger moves to the downside. Make sense? More amplification in its moves. Does that make sense to you? Where a SPY might do that, you're going to get an amplified move to the downside. If you have, let's say, positive news in an FOMC decision, maybe I'm not saying he's going to do this because I don't think he is, but let's say he's like, oh yeah, we're getting cuts in June. And SPY goes here, you would see smalls rip faces off. A little bit more amplification because smalls reacts better to rate cuts. Last part of this note. This is the one that I want to talk to you about. This was the one that's important. A note for pro traders. If you are getting the 4-hour and daily time frame charts, I do list these for supporters once a month, once a week or so. Every couple weeks I'll show some of these to supporters, but they get these every day or every week minimum. Pro traders do, but I want them to know that the 4-hour and daily projections are still on track. There was an expectation on higher time frames that we could trade 500 on S&P 500. And so I want you to know that we have not broken that, have we? We're still sitting on that 500. None of the upside targets nor projections are broken to the upside. They are all intact and still following expectations, almost to the pinstrikes on today's close. We'll review them tomorrow on stream. A note for bulls. The previous SPY low of 497.50 has not broken. Watch it closely today. Now, we're going to talk about a couple of those things that we talked about in this article. First one is U.S. labor costs rise by most in a year. Signs of wage pressures. We talked about this yesterday early morning in the stream. You should have had this yesterday. I think I posted a link to it. So I'm going to post this really quick in the chat. So give me one quick second here. Signs of wage pressures. Hold on here. Bam. I'm going to repost it again for you this morning. Hang tight here. And this is a free article that I archived for you, so you do not need to have a Bloomberg subscription. So there you go. The next thing that we're going to look at here is two important things. Well, let me see if I can bring this up here so you guys don't have to watch this. Hold on one second here. You guys don't have to see that stuff in the background. All right, next one. This is kind of weird. The next thing that I want you to see, this is where things get very important. Preview, bracing for a shallow Fed easing, bond investors take the middle of the curve road. I want you to read through this if you can, right? They're going to go for the 2s and the 5s right now as bond traders are getting torched. This is that bond trade that I talked about in the brief from last night. Now, if you're not a supporter, you're not a pro trader, I'm going to get this to you right now, okay? So I'm going to get you a link to this so that you can review this. This is also the thumbnail from the YouTube stream today and its relationship to that thumbnail. So if you want to read that on your own, you can. Now, here's where the juice comes in. I want you to read through this with me. Traders expect the biggest Fed move in S&P since 2023. 2023. The options market is more concerned about a potentially big move. Hold on here. I got to do something here. Hold on. Hold on here. The options market is more concerned about a potentially big move in the S&P 500 off of the Fed's interest rate decision Wednesday than it has been in any point in almost a year. The benchmark index is implied to move 0.95% on Wednesday, when the Fed gives its view on rates and Jerome Powell holds his post-meeting presser. According to an options strategy known as an at-the-money straddle, where traders buy an equal number of calls and puts with the same strike price and expiration. The last time traders priced in an FOMC day move this wide was in May of 2023. We're going to look at that in just a moment. We're going to bring this up a little bit. May of 2023. Data compiled by Citigroup shows traders are pricing in a big stock market reaction following tomorrow's interest rate announcement that they didn't at any point in the past 11 months amid a generally mixed earnings season. Rising geopolitical uncertainty and concern the Fed will keep rates higher for longer to tame inflation. The S&P 500 fell 4.2% in April in the worst monthly showing since September. Options traders have consistently underpriced the magnitude of the S&P 500's Fed day moves, Citigroup strategists say. Since the beginning of 2022, the broad equities benchmark has posted a bigger intraday swing than the straddle strategy has anticipated on every Fed decision day. So we're going to take a look at this right now. We're going to take a peek at this right now, okay? We're going to talk about this one right now and its implications. I'm going to get you a link to this. I'm going to get you guys a link to this right now, and we're going to take a look at something here. Paste that, send that to you. And I think that of all the links I just sent you, this is the one I want you to read more than any of the others, because we have not discussed this in the brief. Okay, hold on here. We're going to go to the bottom right-hand side screen chart. Sorry, it's very complicated stuff going on here in the background. And we're going to switch over to SPY. Come on, SPY, go back in line here. May of 2023. Let's see what happened. May of 2023. Let's take a peek here and see what happened at the May FOMC. The May FOMC was on May 2nd and 3rd. May 2nd and 3rd. Let's put this under focus here and see what took place. This is the second right here. This is the third right here. May 2nd and 3rd. This is 1600. Let's make that a little bit smaller. And more importantly, this right here. Just looking at this here, what does this look like right here? Take a look at that right there. What does that look like? Kind of looks like yesterday's drop, doesn't it? Kind of looks like yesterday's drop, doesn't it? You get the announcement, though, right? And what happens? We blast up, don't we? And then you come into what? This would be this Friday, wouldn't it? We get that NFP print. We were expecting volatility on Friday, right? Maybe another leg down on Friday, right? Come back into Monday of next week and they ramp it. But we get some pretty significant downside moves. If this was yesterday's downside move and this is Friday's downside move, and then an expectation of vol to come off as we head into next week and the rest of May, where does that leave us in the next couple weeks in May? Let's take a look down the road and see what happens. Move up into next week, volatility into the end of the month, and a lot of sideways action, right? That's PPI, CPI print. But how does it resolve itself into the end of the month? A major move to the upside, right? And actually more major upside moves down the road. See it? So that Citibank group is set. Citibank traders saying, yeah, you got your downside move right here. Maybe we get a relief rally into the end of the day, but then Friday, more volatility. Kind of looking like that right now to some extent, isn't it? If we go over to the trigger screen right now, you got your big downside move, don't you? So maybe we're expecting a little bit of vol at the FOMC meeting. If the FOMC does not change anything, maybe you get a little bit of a weak or aggressive Fed possibly. But once that vol kicks off, we run up into Thursday at some point or price, one or the other. But then it's possible we get another rejection of some kind, and we actually blast down on that NFP print. So I would say to you to be aware that, bulls, you are not out of the woods, even if we blast up today. And you actually might have more downside to come on that Friday NFP print. That could send us down where? Come up here and then blast down into Friday. And not seeing any kind of relief until Monday of next week for a major, well, for some consolidation, and then an upside move later into the month. So just be aware of this down the road. If you think this is bottom, which I do for the next 3 days, right? Yeah, we're going to go up. But are we done yet to a downside move? We may not be until Friday. So be aware of this as we get into Friday at least. Now, let's say we don't get any bad NFP print, right? Let's say we go up here, right? Come back down. We still have the heightened volatility. It's weak, right? And let's say the P print's not so bad. We go back up in a Friday close or Monday. I would still expect some consolidation and that heightened awareness heading into the PPI and CPI prints. It's going to be on everybody's docket here for the time being. Why? Does anybody know out there why it's going to be on everybody's docket? Does anybody know why? Does anybody know why out there? Because bond traders took the fucking 10s and 3s, the 10s and 30s. They took that trade and they got smoked. The market was anticipating, or traders, institutional traders were betting on rate cuts. They were positioning for rate cuts, weren't they? And they got smoked in that trade, didn't they? So now they're going to try to trade the belly of that trade, right? Higher for longer. And you're going to get some pissed off people out there. They're going to tell you, we need to raise rates right now. You're going to get competing voices out there saying, hey, if you raise rates right now, you're going to send us into a recession. And there are going to be traders that want that too for that trade. I want rate hikes right now. Why? Because I'm positioned for a recession, right? I'm positioned for higher rates for longer. I want that print. I'm trading the belly trade in bonds for higher rates and for longer. So you're going to get my own print that I'm going to push that narrative for. The truth is that the Fed likely cannot raise rates, or they will send us into a recession. How can the Fed raise rates? Only if we run hot. Only. Or they risk recession. So what does that mean? JPM is expecting a huge rip in GDP in Q2 and Q3. I've posted that for you in market briefs. Their expectations of GDP running hot. Q2 and Q3. The wisest decision, if Jerome Powell is going to try to maintain maximum employment and robust growth, or the like data dependent bullshit, he should not cut rates and should not raise rates at this meeting. He should hold rates through the summer, let the economy run hot for a couple quarters, and then be able to come back and justify another rate increase around November or December of this year, Q4, to go, look, the economy is way too fucking hot. Maybe increases the speak of we're not cutting rates. And then as we get into November, December, he's like, oh, fuck no. Look at that economy is disgusting. The poors are getting hurt. Everybody's working too much now, and inflation is ripping, and the stock market is moving higher. So I'm going to step in now and intervene, and I'm going to raise rates to 5, 7, somewhere in there, and hammer the market down to the depths of hell. Now, there's another aspect to this. Larry Summers yesterday came out and talked shit to Janet Yellen about how that we should be raising rates and hammering down rates right now. I don't know if you guys caught that, but there's a couple things I want to make a note of here with Larry Summers. Number one, fuck that guy. Fuck that guy all day long. That guy was a fucking Treasury Secretary during some of the worst years in our stock market. Like 2001 to 2008. That guy couldn't hit the side of a fucking barn if he tried. Fuck Larry Summers. He can eat a bag of dicks. That guy would love to send us into a recession. And I don't like Yellen particularly, but she had it right yesterday. That guy is out of his fucking mind. And she made that point yesterday, and I want to explain why. I want to explain why Larry Summers is out of his fucking mind. And I want to tell you why. He was his points about raising rates right now had to do with the housing market. And Yellen's point, Yellen the felon had 2 points, subtle points. Her first point was that if you raise rates right now, it could be a mistake. She said that. And her second point, and he's done that. He's sent us into a fucking near depression. That guy is responsible almost for the destruction of the entire United States economy. Kid you not. But the second point here is this. Yellen made another point that's important to parse. Her point was, it's not appropriate right now to raise rates. Not yet. And her second point was, the housing market is showing signs of loosening. And there's something in that those statements that she made that may be true. What is that statement? What can you parse from that? You guys know? It's that if they tell you long enough that rates are going to stay higher for longer, and that you actually might see rate increases in the future, you might actually break some of these people out there that are unwilling to sell their homes, anticipating rate cuts, and might just say, fuck it. We're living with rates longer than we think we are. And you might get a tidal break of people out there that are grasping their homes, and they say, you know what, fuck it, I'll sell. And I'll settle for higher rates for longer. Just like if you cut rates, you'll have a tidal wave of sellers, right? The market will crash. The housing market will crash. If you're able to make people that are unwilling to sell their homes believe that we're going to hold rates higher for longer and may even increase down the road next year, end of year, you could actually break open that housing market a little bit. If you break open that housing market a little bit, the housing market pricing would come down still. So listen to that closely. If we know that the housing market is going to collapse once we cut rates, if you can train homeowners unwilling to part ways with their 0 or 2% or 2.5% interest rates on the belief that they're not going to, that we're not going to go, that we're going to go higher for longer, get used to 5%, get used to 7.5%. And shit, you might be at 8 or 10 down the road. You might be at 20. It's kind of like playing chicken, right, with a homeowner. You tell the homeowner, you make the realtor believe, well, we're going to cut rates soon. The homeowner's like, fuck you, I ain't selling shit. I'm not getting myself into a 7.5% rate right now. My house is worth 300% more than it was. Nobody's out there selling. I'll time the market. I'll time selling. It's the day and age of the internet. I'll sell right as it happens, and I'll be top of the market. I'll be king of the hill. And I'll get another 0 or 2.5% rate. And I will maintain my wealth. Well, if you tell those realtors and you tell those homeowners, go fuck yourself, get used to higher for longer, there are going to be older people out there that are going to say, shit, I'm planning on retiring and I want to downsize. My kids are in college, this fucking McMansion that I live in. But now they're telling me it ain't coming down. And they're telling me it might be higher. And I remember 20 points when I was young. I don't want to pay that shit in my old age. So Yellen might be on to something. Now, I know you guys don't like Yellen the felon. I don't particularly like MMT either. But that conversation with Larry Summers was insightful yesterday. There might be an attempt by the Treasury and the Fed to play that game of chicken with the housing market and say, you know what? If you don't like it right now, wait until you see it in 2 years. We're going to bend you over if you try to get out in 2 years. We'll wait you out until you do sell. Yeah, it sucks 20%. You want it to suck 100% or 20%? All right. So there's the trade to look at on prior experience. Next up, we're going to look at Gamma Picture today. What has changed in today's Gamma Picture? I'm going to set this up for you really quick. I'm going to put the news squawker back on as I set up the Gamma for today. The Gamma profile that's out there right now for you. We are deep right now, deep in negative Gamma. Oh man, you know what I got to check is the CTA boys. What are they doing? I showed you guys on Sunday those CTAs were begging to sell, weren't they? Oh, CTAs were like tripping to sell. Let's check on them this morning, see what they're doing. They just fucking got. Oh yeah, Yeah, they're not too bad. CTAs, they already began the sell. Trend followers.
And just pleasure note here for Tesla TSLA. Do you know the senior HR director, Arabello's, what he said to have left the company, according to Bloomberg.
Yep, hold on a second here. Get rid of that. Press down there. Spin her up. Bottom right-hand side. All right, let's take a look at the gamma picture. Oh, yeah. More put gamma development to the downside. Some of that 4740 stuff hasn't developed yet. 4700, though, is developing to the downside. This is not good, by the way. This is a horrible gamma picture for bulls. This is volatility. Local support now down below here at 49.73. Be aware of this. Gamma flip way up here. Begin sell the rip right here. Market begins to become supportive. Whoa, shit. My God. Up here. That's not positive gamma, but it becomes a little bit more supportive up here. But we are deep in negative. We are deep. No, we're not volatile anymore. We're in sell the fucking rip. This is volatility. This is sell the rip right here. Local resistance. Now in a new regime down below. Local support. Local resistance. Downside moves incoming down here, right? What do we note about this right here? Earlier in the brief and this morning as I reviewed it with you, what did I say to you if you were a bull? I said you don't want to be seeing new lows, do you? Remember this prior low on SPY right here? If that's local support, there's a hit squad that wants to take us down and break that prior low. Do you see it? That's no bueno for bulls. So be hyper aware of this to the downside, that they are trying to get us down there. So I'm going to rattle off some numbers to you really quick. $49.75 is local support at SPX. That's also your prior low down here. Not right here. Your local resistance currently sits at just below that 3 o'clock in the afternoon, 4 p.m. hourly bar right here. So I'm going to show this to you on SPY right now, okay? Show this to you right now on SPY. If you want to take a peek at that, you can. Now, this is what this gamma picture looks like on SPY. Your local support. At least from a gamma perspective. right here. Local resistance right here. If you're looking for a little bit of doom today, and if you're a bull, what do you not want to see? Or I guess if you're a bear, what do you want to see? If you're a bear, you want to see blood, right? You want to see a new low down here if you're a seller. You love to see that, don't you? Right down to the bottom there. Love to see that if you're a bear, right? If you're a bull, why don't you put this in red for a bear? Right down here. Right? If you're a bear, that's what you want. Sell this down, get a new low, reject this zone right here, come straight back down and slam into local support. If you are a bull, what are you looking for? You're like, yeah, Cap, you know what? I don't want to go any lower. Right about there. I'm going to come back up. All right. Weakness heading into the 2 p.m. hour. You want to hear the Fed say, yeah, everything's awesome. Get above that local resistance and go higher. We'll do this for the bull case. And there it is for the bear case right there. Weakness, right? Jerome Powell gets hawkish. Boom to the downside to 494 in local support. And they want to poke right through it. They want to stick their wick right through it. Trade 494 at best case scenario. 494 at best case scenario. Get that right? No, sorry. Hold on. Right there. Bears want to be trading 493.65. 493.65 right there. And best case scenario for bulls. Right there, they hold that, which I don't think they're gonna. I don't think bulls have a chance to hold this into the actual announcement. I think think sellers are going to attempt to at least get part of this.
There's been some commentary from Synovus.
At least get part of this morning.
Saskatchewan family in the next few weeks.
We'll see what happens down here. If we can break above the half-hour trigger,
pipeline,
we'll trade it. But otherwise, down here is an expectation at 2 p.m. You guys want to snap this for yourselves at home? Some more gamma perspective down here. I'm going to delete it here in just a minute. I'm not leaving it up, so if you want to snap that for yourself, this is from a perspective of gamma expectation. This is the bear expectation right here. Boom. This is the bull expectation. We don't break that prior low. We don't care about that at all. We get back up here and trade up higher. Vol burns off the market into Thursday or price, one or the other. Here you can snap that, take a snip for that if you want. All right, going to get rid of this here. Here, I remember, leave some of this on. How about this? We'll get rid of this. Get rid of that. Get rid of that. Down there, we'll get rid of this. And we'll leave these up. Make sure I clean these up a little bit. Right there. Jeez, looks like a fucking Christmas tree down there, doesn't it? Looks like a fucking Christmas tree. Sorry. Let's bring that over there for you. Doom, baby, doom. Hold that up for you right there. We'll trade that right there together. That down there for you. Okay. That's all I got for you there. Start audio. Just a note here that Wall Street Journal's Timrose says not only is the chances of a June cut dead, but the question now is whether the data will instead make this week's meeting a way station to a more hawkish summer pivot. I do want to make you aware of one thing with Timrose. So Timrose this morning saying this week's meeting may be a way station to a more hawkish summer pivot. Excuse me. I'm going to move this over a little bit here. No, move that over a little bit. Yeah, right there. So you guys can see more of the action from more of the action out there. Move my camera over. So I want to talk about Nick Timrose for a moment, briefly, if we can, on FOMC day. Do you guys remember when Nick Timrose, or not Nick Timrose, do you guys remember when Jerome was getting shit thrown at him? And they were saying Jerome Powell is a tool for the presidential election. Janet Yellen, Jerome Powell are tools for Janet Yellen and Jerome Powell do not want to see Trump get elected. They're going to try to keep the markets up for the election. And I want to say the last 3 rate decisions, Jerome has mentioned it. Jerome has said, I'm not in the pockets of the election. If you recall the last rate decision, Nick Timrose made a comment about like a dovish Fed or some shit in his article releases the day of or before, and everyone walked in, everyone including us, we all walked in thinking that the Fed wouldn't do anything, and Jerome Powell got more hawkish. And my thought there was on that last rate decision was that Jerome got more hawkish unexpectedly and more adversarial.
Sources far away says.
Because the not this rate decision, but the one before, Jerome specifically said, we are not adversarial. Said it in the presser. We are not adversarial. And then this last rate decision, he was adversarial. The Fed mouthpiece, Nick Timrose, was counter to Jerome and what he had to say. Personally, I took that as, I'm kidding you not, personally, I took that as Jerome Powell becoming adversarial and giving the middle finger and saying, you know what, fuck you, I'm not in the pockets of the presidential election. I do what I want. And that piqued my interest because it was counter to the non-adversarial Fed. The information he gave in the last Fed meeting was not prior or telegraphed prior to that Fed meeting. So I do find it unique this morning that Timrose is out there saying what? He's saying not only is the chances of a June cut dead, but, quote, but the question now is whether the data will instead make this week's meeting a way station to a more hawkish summer pivot. Not Q4. Not we're going to threaten you and let it run hot in Q2 and Q3. But the specter of a rate increase in June. So it does look like the Fed is going to start to threaten you with a rate increase, data dependent, in June, or at least Timorous is pushing that narrative. So I'll find it interesting today if that is the actual case in this Fed rate decision in particular, as the last Fed rate decision, Jerome used Timorous to his advantage to shit on the markets. He was adversarial the last Fed meeting. Good thing I bought 0 dates at the close yesterday. Good thing I got my 0 dates yesterday. Well, not 0 dates. I got 0 dates. I got smoked. But I got May 3rd calls, so I'm hoping that those fuckers will come back. What happens if Powell says that Fed rate hikes are in the cards? In my viewpoint, my own personal viewpoint, I don't care if he threatens. I think that in a short time, in a small time period, maybe a month, it'll be material to the downside. But I think structurally the market is intact with threats of a rate hike. If we get a rate hike today, I think we would crater directly down to the monthly trigger. We would fucking crater. We'd go straight to the depths of hell. We might not go there today, but we're gonna go there in the next week or two, really fast. I do believe, though, and still to this day, and I always will, even a decade from now, as long as rates remain higher, bulls will always be safe in the long term. So as long as the Fed is still fighting inflation and fighting rampant employment, I guess, or even fighting rampant unemployment, robust job market. As long as these operations continue, bulls are safe. You'll still get corrections, you'll still get pullbacks, but the up to the right trade is intact as long as the Fed is paused or raising rates. The only time that ends, typically, is when we cut rates. And whenever the Fed is anticipated to cut rates, I will assure you that banks and institutions are positioned to send this market to the depths of hell like you haven't seen. Currently, if they cut rates, we are poised to trade. We are poised to trade the moment they cut rates. The moment that they cut rates. If let's say they cut rates today. Your downside target would be 353.62. 353.62. 3,500. If the Fed cut rates today, you target 3,500. That's right. That's right. 3,500. If you get a rate cut today, probably be a squeeze for liquidity, and then we would rain this shit down to the depths of hell to 3,500. It wouldn't stop. We'd probably have a slow roll for like a month, and then it would just start plunging. Oh yeah, if you're this is all known. This is all known, historically known. They start cutting rates, man. Bulls are fucked. Super fucked. Here, I'll show it to you in a better light. Hold on. Okay, here you go. Ready? Today. I'll make this simple for you. I'll visualize it for you. Rate cuts. Boom, boom, boom. That's a rate cut. That's a fucking rate cut right there. That's a rate cut. Data dependence, no rate cut today. Maybe a little bit of sword rattling. No big. Or if they say no rate cut today, data dependence, we're going to monitor over the summer. A little bit of downside, carry on to the upside. You're getting no rates increase today, but we are 100% going to raise rates in June. Blast down. Right there, blast down. We're raising rates today. Blast down, but it would continue up and to the right. That's like very hawkish speak. No rate increase, but we guarantee a rate increase in June. That's what you're going to get. We raised rates today. Today we raised rates. Blast down, come back up, rip down to the monthly trigger. Nobody's business. Market stays intact. Up and to the right. What else? I think that's every one of them, right? If the Fed says no rate increase, no hawkish discussion at all, data dependent, nothing's changed. Says that shit too, even though Nick Timrose is threatening you, rocket ship to the moon. Straight rocket ship. Okay. So Marmot Burr said IWM could get a quick mechanical pop up and lower if we cut rates. So if we cut rates, that's the trade right there. But this is over the course of many months. Your initial move would likely today be up, maybe even to all-time highs. Briefly, though, we're talking like a day, like one day, and then blast straight down to the depths of hell. I agree with that statement. Whoever said that, Market Burr or whoever you are. The only counter argument to that is that the market is being front run for rate cuts. Normally, when you get the squeeze, it happens when we're not positioned for it. So if, like, let's say none of this happened here. Typically, when you get the squeeze, we are not positioned for it. So let's say we got an emergency rate cut back here. Why do you want to know why we get the squeeze? I'm going to show it to you. If we're on our way up and we get an emergency rate cut, we get the squeeze because banks are long and did not know it was coming. So they will print this trade they're in, and then they'll roll it down. Now, if there's a non-adversarial Fed, and the idea is that we're coming into a possible rate cut, they will make their money on the long side,
Egypt,
and then become poised
Prime Minister
for a rate cut to drop the market straight down. Well, not just like that, but, boom, boom, boom to the downside. This is positioning right now for an anticipated rate cut. And now that they're being told, now that they're positioned for a rate cut, and they're being told, you know what, fuck you, you're not getting one. They're like, motherfuckers, I want my money. And we'll wait for the next threat of a rate cut to do it again until it happens to the downside. You can actually see this same trade play out very clearly in the 1970s and very clearly in the 1990s. No, I shouldn't say that. 50s, 60s, and then the 1970s. You can see where they would set. You can actually go back and look. And if you tick off where surprise cuts were and then tick off where planned cuts were, they fucking front run it every time. If it's a surprise, they get caught off guard. They squeeze it, and then they send it to the depths of hell. All right. I've got the Qs up here for you. Qs on a 30-minute bit. I'm going to do it to a 30-minute basis. Here are the Qs on a 30-minute basis for you. They squeeze because they're upside fucking down. They're not positioned for the trade. Whenever you get, so there's a difference between a rate cut and a surprise rate cut if they're on the wrong side of the trade. If I'm an institution, it's my market, and we're going higher, and you tell me all of a sudden that we're going to get a rate cut, like, hey, we got a rate cut coming today. You're going to see the market rip faces off, print all their shit, then they're going to send it down to the depths of hell. If they're forewarned in a non-adversarial threat, hey, we may get a rate cut coming out here in May or June. We're now in May. They're going to set that trade up before we ever get there to blast the market to the depths of hell. Trust me, they're angry. They're angry that they're not getting the rate cut. They want that fucking rate cut so bad. If you think you're angry, you should see banks. They positioned for it. And even if they don't get the rate cut, they still want the print, don't they? They still want the print. All right, so we got SPX gamma down here. We want to turn this frown upside down if you're a bull, don't you? You want to turn that frown upside down and get above this.
3.3% a week ago.
You want to turn local resistance into local support, don't you? Get above that yellow line. I want you to warn you of that too.
GlaxoSmithKline GSK denotes a senator has slammed the company over the cost of asthma inhalers, according to the Washington Post.
This local resistance can become supportive if we get above that green box right there. Get above that bad boy, and you can start making some supportive gestures to the market. All right, we'll turn that back on. We're going to get rid of SPY. I'm going to give you guys a few tickers down here. We're going to take a look at these, and then I want you guys to tell me what you want me to put up for you. So we're going to put the Dixie up. Here's Dixie, 30-minute, or that's the daily basis. We're going to switch to a 30-minute basis on the Dix. Oh, yeah. Oh, yeah. Send that Dix to the depths of hell, baby. Send the Dix to the depths of hell. Next, we're going to do, we got the Dix up. We're going to do HYG. I'm going to switch this to a 1-minute chart. Everything else is on a 30-minute basis. Oh God, the HYG. Look at all that. Look at all that. Look at that gap. Oh yeah, let's close that HYG gap, baby. Close that HYG gap. Get up there. Oh yeah. So you've got HYG, Dixie, HYG, Dixie, SPX. We got the Qs here. $30-minute basis. I thought I did the Qs already. I don't know what. Oh, hold on here. I think we're going to squeeze coming up on our hands. What is going on here? I got some wonky shit going on here. Oh, fuck yeah. Squeeze the fuck out of this. Squeeze it, baby. Dixie, HYG, SPX Gamma, QQQs. Start squeezing their fucking faces off. All right, there's the Qs. Next one we're going to do is VIX 9-day. Got a nice little spike up. Whoop. VIX 9-day, nice little spike up over here, right? They're looking for this again. VIX really not getting crazy yesterday. VIX still elevated. Bears, look, I'm going to show you this right here. VIX 9-day did not get up yesterday. Did not get up and go crazy. So just be aware of this. This is counter to bull narrative or my narrative or any bull narrative saying shit's going to cool off. This doesn't show cooling off, does it? They've got an opportunity today to squeeze it up to 20 bucks. They have an opportunity on Friday to squeeze it up, right? The VIX cools off today in the FOMC and then rips some faces off into Friday. So be aware of that. Also be aware of CPI and PPI next week. They still want that upside move in the 9-day VIX, even if it cools down today. So we're going to pay very close attention to this today. This VIX 9-day. If you're a bull, you want to see the VIX get blooded down here today. Come on, baby, squeeze me up. So you've got Dixie, HYG, VIX 9-day, VIX 9-day, SPX Gamma, QQQs. We're going to do IWM chart next. See, this is what I normally do in the morning, by the way, before I even come on stream. Like, I do all this shit in the morning. I had to reset everything this morning due to my computer. Every single morning have to go through this. Push that over there. HYG trying to squeeze to the upside, parked right now in its weekly trigger. Oh, yeah, just pump it. Oh, I love USD JPY. We can look at that if you want at some point. All right, next thing. So I've got those charts up. I'm going to tell you the charts that I have up right now. I've got SPX Gamma, QQQs, IWM, Dixie, HYG. Which tickers do you want me to put into the rotation? Tell me in the chat, and I'll put them up. Hold up. Not yet. Don't say anything just yet. I got to read this. Hold on here. Baba, Neo, NVDA. How about Apple for the report? MSTR. Etsy. I'm looking for reports. ES or sorry, Etsy. My bad. DJT. So we can short it down to 0. Tesla, Amazon because it got wrecked. AMD because it got wrecked. And then came back. Or I said Amazon came back. AMD because it got wrecked. Ooh, BTC is a good one. Dash. What else you got out there? That's all I can see from you guys. Let me check YouTube. Someone was comparing DJI and Lily. Mara, Race, Google, S-Bucks, PLTR. I'm missing some of you guys are saying eBay. CLSK. All right. That's enough for right now. I like Fisker right now, I think. All right, I think, did we like Fisker last week? I think we did. It's a good mix. SNDL. I haven't traded SNDL in a long fucking time. All right, so I think we've got most of earnings out of the way. Or not earnings, most of FOMC out of the way. This should be a good primer for you on earnings today. You want to be listening closely to what the Fed chair has to say in the presser. That's going to matter. Expect a hedge on the market until that presser begins at 2:30, mostly because there's an idea out there a narrative being pushed that you're going to get very extremely hawkish
outlook of Brazil.
Fed speak
does affirm the country's credit rating at BA2.
Let's make these small.
The outlook to positive.
Make that not as bright. Also note that we will have Fed Chair Jerome Powell live presser on the show. Also note that we should have the rate decision before most anyone else, as we have news squawk outside of maybe a Bloomberg terminal. We should know before Twitter does what the rate decision is, and before any news organization can print it. So you'll be, if you want to tune in on Twitch, there's no native delay. It's just a few notes here for you. Here, yeah, we got that right. I think we got that right. We could actually bring that down there. Bring that down a little bit. About there. Just a programming note to you that we should have the rate. Couple programming notes here before we get started on the rate decision. Number one, YouTube natively delays live streams by up to 15 seconds. They will do that repetitively on you throughout the day, even if you speed up your stream. So if you're watching us on YouTube, and you're looking for a crucial moment in the market, I would recommend that you click on the gear icon in your YouTube app or on your web browser. And if you click on that gear icon, that looks like a wheel, it'll bring up a submenu called playback speed. And if you increase playback speed to real time, like ×2, ×3, I will sound like a clown, like I do normally, but with a weird voice. And it will bring you into real time for about 5 or 10 minutes. So if you're like, hey, I want to get real time live stream, that's the only way to do it on YouTube. If you choose to, you can watch us on Twitch. I personally recommend Twitch, mostly because they have removable windows. You can work on other things and leave it in the background playing. YouTube will cut out audio sometimes on a phone, but Twitch is pretty cool. But the best part about Twitch is that it is real time. The delay in Twitch and where I am is about maybe 1 to 3 seconds at most. And my setup here, what I do is I condense all of the video and audio, and then I send it through a second computer that is sent to you pre-compressed and formatted so that I deal with it all on my end, and I immediately send it to you really fucking fast. Really fucking fast. So if you've got a good internet connection at home and you want to watch us on Twitch, the ticks should only be delayed by 1 second, sometimes at max 3 seconds. So pretty fucking fast. So that's your first programming note. The second programming note is that we use News Squawk for our data, or for our audio data in the background on this show. This is like Trade the News. It's really fucking good. It's really fucking expensive. It costs $450 a month or something insane for that News Squawker. And the reason why it's that expensive is because just like a Bloomberg terminal, the moment that it hits the wire, any news hits the wire, you get about anywhere from a 30-second to up to minutes of a forewarning or advanced warning on breaking news that may materially impact the market in a major way. So hopefully, if you don't want to watch the show today, you can just leave us on the audio. And on Twitch, it's like you're getting the news faster than Twitter gets it. This is fast. I know for sure it's faster than anything on Twitter. So I don't know who you're following out there that drops like news tweets and stuff like that, but we will beat them to the punch in most cases. Okay, so those are 2 programming notes for Jerome Powell. And the last note would be that we will have audio and video of Jerome Powell as that news breaks. And I will give you play-by-play if it's bullish or bearish, hawkish or dovish. And if we can set up a trade, we will. I did already yesterday buy calls. I bought 520Cs repetitively. Literally after the bell before 4:15, I was the last set I did not buy, but at the start of 4:15, that first rip down between like 4 o'clock, 4:05, I did add some like fucking 7 and 8 cent or 8 or 9 cent calls, but it did go down to 6 or 7 cents, and I had been buying at 26 cents above for May 3rd. So I'm done buying calls at this point. I'm like hundreds of fucking stacks in. And I'm anticipating an upside move, so I don't know if I will join in or not today. I may join in. I like to get 0 dates if I can. If that trade presents itself, I'll take it with you on stream. Again, as always, do not be following my fucking trades. You trade your own plan. But I would love to see today some kind of an upside, then like if we get a good rate decision, but then a blast back down in anticipation of hawkish Fed, and hopefully be able to buy that reaction to the upside or buy some puts to the downside if it actually is hawkish today. So here we'll take a look at this, bring this up. So that's all the programming notes for you. We'll take a quick look at Bookmap. Oh, yeah, baby, it's up there. And there's this downside target right here. Be aware of this one down below. Look at that down below. Be careful of that down there. Here, we'll put that one right there for you. We're trying to send you to the downside. And what else? I think that's it. I think that's all I got for you at the moment. So I'm going to start putting up some charts for you. It's 12 p.m. I'm going to put the charts up for you, and then I'm going to take a quick break before the decision at 2 p.m. and the presser at 2:30 Wall Street time. Whew. Already losing my voice. I need a throat lozenge. I need a bear load. These are called bear loads. They're the preferred throat lozenge for bulls. I got a vacation coming. I have a lake house. And moving to the lake house here. I don't know. I was supposed to do it last weekend. But instead I wanted to take a look at it to put furniture in it. And I had to so I went out there to turn the water on and shit. And some pipes burst in the winter. So I wound up bringing out a handyman. There's no handyman out there, so I had to get a handyman, bring him out there, and did a bunch of work on it. And I got a bunch of construction going on. So I own houses. I'm trying to sell them. And I got a house I'm trying to do some construction on. I got a lot of shit I got a lot of fucking stupid shit going on. God. Take the weight off the shoulders. Stress out. I got like construction going on in one house. I got a daughter that's like in college, even though she's in high school. Trying to get her into one of the top schools in the country early and all that other stupid shit. And we're not early, but we'll talk about that later sometime in the stream. The U.S. education system is fucking bullshit. Like my oldest daughter, right? My oldest daughter will get into Stanford. She has a high probability of not getting into the University of Michigan, Ann Arbor. Not guaranteed, but a high probability of not. Do you know why? Money. They want that out-of-state tuition. It's so insane. So they want the out-of-state money, which pisses me off to no fucking end. So anyways, got all that shit going on. Oh yeah. It's rampant right now, like straight rampant. There's some rampant shit going on. I don't know if you guys know a lot about college right now, but there's some insane shit going on. Insane. Like, it's not good enough that you're the captain of the tennis team. It's not good enough that you're the leader of. This is how you want how gross this is. Let me explain how gross this is. You could be the leader of. You could start a soup kitchen as a kid. Start a soup kitchen and be a leader of that soup kitchen as your extracurricular activities. And it's not good enough. They want you to do something that sounds cool. We're living in the age of tech bros, literally tech bros influencing kids' entrances into universities. So they want your son or daughter to be a tech bro at 16 years old. So, like, instead of you, like, being, like, the captain of the tennis team and the fucking captain of and you started a soup kitchen, they want you to start, like, an online soup kitchen. I shit you not. It's that fucked up. So, and then they want you to be going to school out of state so you can pay big money. It's insane. It's insano. Anyways, vacation. This weekend, I almost thought about not going there for the summer because I've got some construction bullshit in the city. So, and this is back to the daughters. My youngest daughter, I don't know if I would have her back in time for school, for the construction to all be complete, unless I pushed it off to next summer, like, or split the construction between this summer and next summer. But I don't want to, like, move there, then move back, then fucking do another year. It's a big complicated thing. It's a big pain in the ass. It's more of a pain in the ass than anything. So I'm either gonna, I don't know what I'm gonna do, but I think I might go there for the summer with the kids, and then, like, buy a whole nother set of furniture and shit and all that other stuff, and just leave it out there and just go to vacation for 2 straight months, stream with you guys from the lake, and then come back for the school year. Because my oldest, this is where shit gets crazy. Like, the oldest attends the University of Michigan as a junior. And she's, if I keep her in the Detroit area, she can attend her senior year of high school at the University of Michigan again. If I move her this year and don't come back because construction's not done, she won't be able to attend the University of Ann Arbor in her senior year of high school. And the admissions process to be accepted as a Michigander, I think that's what they call them, Michiganders, means that she attends that school in junior high or in high school to better her chances to be accepted into that university. My daughter wants to go to the University of Michigan Ann Arbor so fucking bad. She is go blue. She will do anything to get into that school. But they want to know that, like, they want more. Like, we want more. We want to know that your daughter really is gold and blue. Oh, here we go. Go green and white. Like today. And green and white, same thing, right? Yeah, they want to know, right? They want to know. Like, it's so bizarre. Like, universities today is so fucking stupid. Like, they want to know. They want to know that, like, they want you to be like, they want you to be drinking the Kool-Aid. Not the Hawaiian blue, but the blue and gold. And she has another issue, too. My oldest daughter went to private school, in person, online, and got, she's a National Honor Society. But the University of Michigan and other good schools want proof that she'll thrive in person at a top institution. Dude, my oldest daughter, I love that girl. God damn, I'm thinking about her right now. My daughter, I fucking love my daughter. she's broken her ass to get where she is. So we were looking at, we were talking to kids that go there and watching some other YouTube videos of kids that go there, and then reached out to them, find out how to ensure she can get in. She hasn't ensured that she's going there, but my daughter's done all of it. Like, my daughter's like, well, fuck it then. Or she didn't say fuck it, but that's what I say. That's my interpretation. She's like, fuck it, I'll just go to school. I'll go to University of Michigan in person in my junior year. Sign me up. And I'm like, are you sure? She's like, I got this, Dad. Not in those words, but basically, right? So she signed up for University of Michigan in person school because this kid told her, this homeschool kid told her, you gotta prove, or they're not gonna let you in. They're gonna make you go to University of Michigan in Dearborn for 2 years to prove that you're gonna do well in the Ann Arbor campus. So what does she do? She enrolls and she kills it. Murders it. She just got done. She just finished her semester. And she's like, Daddy, what do you want me to take next? Kid you not. She's like, what do you want me to take next year, Daddy? I'll like, she's like, 200s, 300s. Let me find out what I can take there. She goes, I can't take certain classes if I'm taking them in high school right now. She goes, but I'll take whatever I can and I'll destroy it again. And I'm like, I love this child.
So you have 4 Exxon.
Like, this child is so fucking smart.
On the $60 million Exxon and Pioneer deal in the coming days.
She's so fucking smart. It's so fucking awesome. She makes my whole fucking world. I'm not gonna lie to you. This girl is my fucking dream. She really is. She's my whole world, right? And and here's the best part. My daughter wants to help people. Like, she wants to help people, or she wants to help the world. So, like, my daughter wants to. Well, she wanted to be in finance. She wanted to be actually started out wanting to be a botanist or some kind of, like, I don't know, water botanist, some kind. But then she switched to finance. But she wants to help people in finance. I don't know what that means. I have no idea what that means, but she wants to help people in finance now. And I'm like, what do you want to do? I'm like, so many kids in high schools, they don't fucking, they don't have financial literacy out of high school and college, or they don't go to college and they don't get an education, financial education when they're young. I'm like, you could totally like change that aspect of America, start a movement to change that for kids. We used to have like home ec and shit and shop at high schools. We don't do any of that shit anymore for kids. Junior high, they used to do a lot of that, but they don't do that for kids anymore, especially kids that don't go to college, right? So you're like a young person and you get roped into all these fucking credit cards and fucking buy here, pay here, fucking build credit with a used car with 28 APR, 28% APR. Yeah, I'm going to fuck you at 18 years old. Here, take a bunch of loans at a for-profit college. Like, how do you, like, intervene in that in a kid's life where a kid trusts you? Anyways, that's a whole fucking tangent. But this girl makes my world. That's the point. So if I have to, we'll come back to Detroit this winter so that she can go to a second semester of University of Michigan, and hopefully that helps her and in her journey in life. So whatever I can do to help that. I can't do. I mean, she has to do the work, but if she's busting her ass like that and she's killing it, she goes from homeschooling into a university environment and is getting A's, baby. In junior in high school doing that. I'm like, I love you. I couldn't do that. I'll be honest. When I was 16 years old, if you'd put me in college, fuck no. No, I ain't that smart. I'm smart, man. That's smart. Hell no. Hell no, am I that smart? Hell no. Like, God, that kid. Some kids just have it, right? They're just smart. Oh, I got this. Figured it out. Got it on my own. I don't need your help. Just give me a test. I'm like, that's this kid. All right, sorry. bragging about my kid on a stream in the middle of an FOMC day. Get me on a tangent here. Anyways, vacation. We're going to take a 2-month vacation this summer. And we're going to stream from, I think I'm bringing a sailboat with me. Not positive yet. I have another boat there. But we're likely going to do some sailing together this summer and stream. I would love to do like a stream. I would love to do like a stream while the market's going and be on a sailboat doing it. At the minimum, we'll have some like windows and shit so you can see the water. It's a pretty cool place. So, yeah, we got a permanent summer vacation coming this summer for the kids. Hell yeah. Fuck yeah. Fuck yes, we're doing that. They got so much doom and gloom in here. Look at these sellers. They're just brutal. FOMO bears get in late. They want more down today. Fucking bears. Fucking doomers. Yeah, fuck yeah, we're gonna stream from a boat. One way or another, we're gonna stream from some kind of fucking boat. I got like a 50-foot dock, dude. 50-foot fucking dock right on a what's it called? I forget what they're called. It's like when you're on the lake and you got the little waterway that runs down there on the side of the lake. It's pretty cool. Start yelling at the goddamn dogs. What are you doing? You eat a hot dog? We'll throw hot dogs out at them. A canal. That's what it's called, a canal. It's right on a canal. Cap 2 days ago, you said buy dips on Tesla. Yeah, I bought the fucking dip at 140 exactly. So I'm looking to buy in the dip again. I'm looking to buy again because I did sell. I took the profit off Tesla. But I am looking to buy Tesla again. Now let's talk about Tesla. Well, there's a few things. So I was a little pissy last night about something else. I wasn't able to buy fucking Amazon. Wasn't able to buy AMD. I didn't buy Apple yesterday. I've been wanting to buy the stock market. I bought Tesla at 140. And in my greed, I sold. Like that day trader just kicked in and I was like, take the money and run. We'll get another dip to buy. We'll take a look at some of these stocks today because I want to own some shit. I truly do. I know I say that and then I do something completely different. But I want to own like Vanguard, SPY. I want to own, I would love to own a little bit of like Amazon and a low, which yesterday presented itself beautifully. Apple on a low, I want to own it. I want to own some AMD, some NVIDIA on a low. Any of those things would be badass to own. Badass to own. And I wouldn't have gotten a fill yesterday. I'll be honest. If I had an order in yesterday, I would not have gotten a fill. I would have missed it. But I did not. I don't think most of you saw the groping going on of those tickers. If I have, dude, this is 2020 vision, but if I fucking knew that was going down like that yesterday, I would have hand over fist bought it. Kid you not. Hand over fist bought it. Yesterday to me looked like, I think some people out there are going to tell you that it looked like it triggered buy triggers on institutions and they're just waiting to get out or some shit like that. Fuck no. I would have bought that shit hand over fist yesterday in a fucking minute. What a fucking steal on Amazon yesterday. Fucking pure steal. I'm pissed about that yesterday. I was like, when I saw that out, was registered in my brain? I had a phone call last night with Binky, and Binky was like, bro, I went around the internet and I started looking at everybody that got hammered. And he's like, you're not going to believe these tickers. So Binky's like sending me all these tickers. And he's like, dude, you got to buy this and buy that and buy this and buy that. And I'm like, son of a bitch. All day long would have bought like Amazon all day long yesterday. You offer me that again, I'm gonna buy it. Buy it, buy it, buy it, buy it, buy it. So it was crazy as hell. It was bullshit. Dude, yesterday's Amazon ER was a scam. It was a fucking scam. It was a fucking scam. It was bullshit. I'm going to show you the Niederhofer shit later today, though. They pulled this shit, I want to say, in February 30th or March 30th of 2022. Here, let me look for it right now. I'll show you the last time they pulled this scam bullshit. Hold on, I'll do it right now. I'll look for it right now. Hold on. Hold on here. I'll show you guys last time they scammed this shit. I promised you that earlier this morning, and I didn't show it to you, so I'm going to do it right now. Before we bring up any other tickers, I'm going to show you that one. So, like, Vic Niederhofer this morning came out and said, this morning or yesterday said, this has never happened. Gone down 40 points in the last 5 minutes, 1 minute, or after the bell, any of that kind of stuff. That's not completely true. We had one of those moments. We had one of those moments when.
And just so you're aware, the US reportedly discussing finalising bank capital rules as soon as August, says the Fed and FDIC, and also the OCC. They won't completely redo the July 2023 proposal, as according to Bloomberg.
There was a scam dump one other day. Was it March or February of 23? Was it 2023? Was it February, March of 2023? Can't remember. Let's look at the last time that bullshit happened. No. It was like early in the year. It was early in the year that I recall. We were waiting for it. We figured it would happen, and it did. We waited all day long, and then it was the last minute of the day, like literally 1 minute of the day on the 30th, and they blasted us down to the literal depths. I think we traded sideways all day long, and then we dropped 30 or 40 points last few minutes of the day. Let's see if I can find that down there. Nope. That wasn't it. Nope, that wasn't it. Nope, that wasn't it. No, it wasn't then either. God, I gotta find that day. I used to remember that day, but I don't remember it anymore. God, I gotta find it. We didn't sell all day long. It was like the last minute of the day. Literally the last minute of the session on the last day of the month. We dropped 30 points in like a minute. We had puts, actually. Nope, that's 11:02. Wasn't it? God, I gotta remember when this fucking thing was. It was fucking epic. It was fucking straight epic. It was banger. We made bank, dude. It was stupid. When the fuck was that? All right, I'll find it. I'll find it at some point. I don't know. I don't remember when it was. It was like a February or March, either 2022 or 2023. I might have the month wrong, but is that it right there? Nope, that wasn't it. That wasn't it. Anyways, I'll try to find it later for you. IWM squeezing right now to the upside, trading 195.80. IWM straight pumping this morning. Hedge still on S&P 500. Oh, did I delete that? Yeah, open that up. Oh, there we go. Okay, we've got for today, we've got big ones for today. We've got Etsy, Pfizer, Qualcomm, DoorDash, eBay, Upwork, Marriott's today. Tomorrow we've got Apple. We've got Block, also known as Square. We've got Coinbase, DraftKings, Penn, Rocket, Peloton. I hope they go to zero. Moderna. We've got Wendy's. Wendy's, baby, for the Bulls. Then on Friday, we've got Fubo, and I always say Fubo for some reason. And that's pretty much the big ones. Cloudflare, I guess. DraftKings, I think I said that. Let's take a look for Wednesday. I wish I had these before or after. I think that's before the bell was eBay, wasn't it? Marriott was before the bell. If I was correct on for that was for today, but Etsy's after the bell. MasterCard's after the bell. Let's look at Etsy and MasterCard to start. We got a lot of small caps coming out. Whole shit ton of small caps coming out. Mid caps, small caps. Here's Etsy. I like Etsy here. Bullish. Everybody's flinching. Everybody's waiting for these ERs now probably to get wrecked, right? Etsy looks pretty good here, well, at least on a 30-minute basis. Down there and then up for the target. I bet you all the bulls are scared shitless today, aren't they? All the bulls are flinching. They're like, dude, you see what happened yesterday? They're going to blood the entire market. I bet you everybody's just sitting on their hands today. You know what got me yesterday? In the note from last night, what got me was that they weren't taking any chances, were they, for Apple's ER? They were not taking any chances. They were like, you know what? If we don't blood Apple, If we don't blood Apple along with Amazon and AMD, if we don't blood Apple with Amazon and AMD, and we wait until Apple ZR, they're gonna know what we're doing in advance. So fuck it, take them down right now too. Fucking gangsters, straight fucking gangster. Okay, what else we got? MasterCard. Here. Oh no, it's not. They blooded MasterCard too. Nice. They fucking nailed MasterCard too. Real nice. Fucking Jesus Christ. Will there be any insider trading on that? No, it's our market. Wait a minute. What happened? What's that? What's going on there? They just like selectively went around the market yesterday and said, fuck you, reset all. Can you imagine how many people got, can you imagine how many people got wrecked yesterday that were like long some of these tickers? Like, you want to see something fucked up? Here's something fucked up. I got something fucked up for you. Yesterday we were looking at Amazon. And as we went through Amazon yesterday, so as we talk, damn it, come on now. So yesterday, I'm going to stop this really quick so it stops moving. So Amazon, right? We intentionally brought up. So we intentionally were like, yeah, man, whoever this guy is down here, killing it. He doesn't have a care in the world. Like that guy that works at your local financial advisors, like, boom, I got a steal, bro. Everything is awesome for Amazon. Everything is awesome for Amazon, right? I mean, this guy over here is thinking he's like king shit. And what do they do on their earnings? Fucking take it right back down to the same place. Lower. That's bullshit scam right there. like your local Schwab guy is like, your local Schwab guy probably fucking kicked his desk over yesterday. Guaranteed. Kicked his desk over yesterday. Guaranteed. Your local Schwab guy is pissed this morning about Amazon. And we were talking about this. I'm like, oh, dude, I wish I got down there. I would have totally bought that. And in a course of 5 minutes, they erased. In a course of, like Amazon's expectations were meant to be missed, and they still basically fucking beat them. That shows you, by the way, how strong our economy is. See that shit down there? Look at that. Fucking A, man. And they invariably beat. They didn't give a fuck, did they? I had someone yesterday tell me that I had someone try to tell me yesterday someone tried to tell me yesterday, a friend of mine on the phone last night tried to tell me well, they're not that strong, Cap. And what about all that credit card? What about all those credit card what about all that bad credit card debt that's coming out, right? Not debt, but hold on a second here. Wolf Street sailors drunken. Here, I'm going to show you guys this. I want to show you guys this right here. Like the consumer's hurt right now. I'm like, nah. The consumer's not hurt. Consumer wages are coming up. They're working. Like, well, they're not spending money on new houses. They're not spending money on furniture. They're not spending money on this and that. And GDP's not going up. And production's not going where it's supposed to be going. And the truth is that that's a false narrative. It's a false narrative. The economy is extremely strong right now. Extremely. And you're also asking the Fed today to destroy that strong economy at the most inopportune time. Inopportune. Listen to me closely. Inopportune. One of the most inopportune times to destroy the consumer and our economy is right now. Listen to me say that closely. You're asking the Fed to maintain robust employment and a robust economy, right? You've got people out there today, including Timorous. You got Timorous saying, oh, fuck you, we're going to break the economy. And Jerome is going to do that too. We're going to smash the consumer. And inflation's too damn high. And the consumer wants a better life. Consumer wants a better life, and they're having a hard go of it. Well, we know yesterday that's a lie, right? We know, well, there's some truth in it, but there's some lie to it as well. There's some truth there, but there's not some truth there, right? You have the people that are getting the most hurt complaining and being the loudest voices in the room. But the data suggests otherwise. The data suggests that consumers are increasing their pay. They're working a shit ton. And they're partying like it's 1999. Now, they might not be buying houses. They might not be renovating their kitchens and bathrooms anymore. They might have finished buying furniture for their house. Well, that don't mean the money ain't there and they ain't spending it. They are. They're fucking partying. So I just posted a link to you from Wolf Street. I think I posted this in a prior stream, but we are on Fed Day, so I'm going to show it to you right now. Hey, Cap, what about all of those credit card defaults? If you read this article here from Retail Sales and Services, I want you to also read through this, and then I want you to look at the comments at the bottom. The comments are where it's at on this article, because a lot of the arguments that you have that our economy is not strong, this guy Wolf Richter, goes on the attack, showing you the facts that our economy is actually stupid strong right now. Now, you might be feeling it. I'm not saying that you are not feeling it. But the data suggests that you're working more, robust employment. You're spending a shit ton of money, but not necessarily spending it on things that you're looking for. You're going to DoorDash. You're paying OnlyFans. You're paying the Island Boys to see them suck each other off, I think I heard. They're kissing each other and having incestual relations on OnlyFans. Shit you not, that's true. You guys are going on the internet and you're buying a bunch of stupid shit you're not supposed to be buying. Did you guys hear about the Island Boys? Woo! Holy shit. One guy said that he went there for research purposes because he didn't believe that was actually going on. Allegedly, that's some real shit. I kid you not. So, though we might be hearing the voices of people that are struggling, right? They're very loud voices. The data is suggesting otherwise. That the vast majority of you are pissing your money away. You're not saving. You're not buying houses. You're not buying furniture. You're not having your house renovated. But what you are doing is you are out there rocking and rolling like it's the 1920s. And that's kind of a glaring thing, right? When the data is suggesting that you're pissing your money away everywhere. You really are. You're pissing. You guys are going out to eat like crazy people. Like you're eating everywhere. You're out partying. You're at bars drinking. You're buying drugs, marijuana cookies. You're buying the Island Boys. You're going to Taylor Swift concerts. You're going to fucking ski. I kid you not. This is real. You're really doing this stuff. The data says it. Data shows that you're doing this stuff. Now, you might be incidentally saying you're not doing it, but the data says the other half of society is. The other 7 out of 10 people are actually doing this. You guys are ordering fucking Mrs. Fields cookies, fucking 2 cookies at 2 a.m. for like $80 and having them delivered to your house because you want a fresh fucking cookie and couldn't go to the fucking grocery store. I shit you not. Wipe the crumbs off your shirt. Wipe the crumbs off your shirt. You're not even buying a pack of cookies. You're literally buying 2 fucking warm cookies at 3 a.m. because you're high off your ass. I kid you not. Read this article. It's disgusting. The best part about this article, though, is the comments. Because the comments are like, whoa, I read this on FinTwit. And Wolf Richter's like, here, go to diagram 6, subsection 2, and tell me what that says right there. Go away now. Next person up. I kid you not. I kid you not. You want to talk about jobs, right? Let's talk about jobs really quick. Let's talk about jobs. I got another fun one for you. Want some fun candy size shit for you? I got better ones for you. Jobs, people working. Let's look at that. I want to show you guys something here. I want to show you guys a really cool fact here. You guys want to see rate hikes, right? And you want a recession, right? Larry Summers wants a recession, right? He wants a recession, right? And gather around. So here's an article. We highlighted this earlier in the week. We're going to do it right now because it's Fed Day. We got more viewership than usual. Why so many men in the U.S. have stopped working. Now, there's a bunch of reasons for that. I'm not going to get into it right now before we get into this Fed meeting. What does that say? It could be about recessions. Since 1950s, whenever the U.S. economy fell into a recession, men's employment rates intended to suffer a longer-lasting blow. Remember now, there's a narrative being pushed that we will need to increase rates, and that Fed Chair Powell is going to get more aggressive, and that's expect doom and gloom Fed Chair Powell, and we're going to start doing some damage on the economy, right? This is the Fed, whose job is to maintain robust employment and a robust economy, right? Let's look at it. Since the 1950s, and Larry Summers wants the same thing. Let me tell you what Larry Summers wants to do to you. Since the 1950s, whenever the U.S. economy fell in a recession, men's employment rate tended to suffer a longer-lasting blow. When the economy entered a recession in 1953, the share of prime-age men with jobs dropped from 96 to 92.8% and never fully recovered to pre-recession levels, per the Bureau of Labor Statistics. Now, this is a great chart right here. Why is it a great chart? Why is this a great chart? Because we're sitting here in a effing rate decision meeting, and you've got people out there saying, we need to raise rates. We need to raise rates right now. What do you got here? You've got a total decline of men participation rates in our economy. If we raise rates today, we know a few things. We can extrapolate a few things. What can we extrapolate? Number one, we're at the lowest participation rate in history. Are you telling me that you want to send that participation rate even lower? Is that what you're telling me? You want to send men's participation rate lower? What, so the next time it comes up here and goes lower? And then that time it goes even lower? Is that what you're telling me? Is that what you're really telling me? If anything, we need no more rate increases, and we need robust employment so that we can break out of this decline since the 1950s to give a breather to the workforce to participate more. So what happens if we begin to continue to tighten right where we are? Look at that, right where we are. You're telling me you want to force a recession, don't you? Because if we do begin to tighten and crank, we will create one. Because we've done it time and 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 time again. So when you're saying you want to tighten today, you want a rate hike today, you want a rate hike in June, I'm going to say to you, you might get the Fed speak threatening one. You might get the threat of a rate hike. But will they actually rate hike in May or not May, but today or June or August, September, October? Likely not. Would likely be better to let the economy run hot so that you can get the unemployment rate up or the employment rate up there and then hike rates, right? Hike rates. Hike rates. Otherwise, you do risk a recession. History tells you as much. So do you get a rate hike? Probably not. Janet Yellen made it clear with Larry Summers yesterday that it would likely send us into a recession if we raised rates. She's telling you already, even if they threaten, as long as they don't right now, we likely will not go into a recession. My bet is that they will not hike unless we get 2 quarters of raging hard on GDP. So you let that GDP run hot. You let people work their asses off. I don't care if you're taking 2 jobs, 3 jobs, or whatever. We are just now right at the spot where you're either going to fucking truly send us into a recession or a depression, a bad one, if they begin to raise rates. And I bet they're hyper aware of that. So I'm fascinated to see what Jerome says today. Now, the threats are fine. Threaten the market, point a finger. Yeah, we're going to raise rates again. Why are you threatening the rate raises, the rate increases? Not because they're going to do them, but because you're trying to loosen the hands and grip of homeowners. So the idea behind the threat of a rate increase currently is not to send us into a recession. It's to wrestle the thought loose from homeowners that rates will be coming down anytime soon. And you won't actually get the rate hike unless we run hot. Now, if I'm wrong in those statements, if I'm wrong in those statements, then that means the Fed does want to create a recession. And the Fed does want to what? Max out unemployment. Right? And does want to crush the economy. They ain't doing shit. There is no rate hike today. And my bet here is that any hawkishness is like gambling on rate cuts, right? Any hawkishness from the Fed is bullshit. They will only raise rates if GDP runs hot for 2 quarters. That's it. Because if they do raise rates now, or they raise rates in June like Timorous is saying, you should put your helmet on, and you should likely put your flak vest on, throw some 100-mile-an-hour tape around them ankles and around them wrists, because we will enter a recession. So if GDP, we don't wait for GDP to moon in Q2, Q3, and they just start hammering us with rates, there's a high probability that you will send us down to the depths of hell. Very high probability. Better to let it run hot, Knock it down. All right, I'll be right back. Give me 5 minutes. We'll take a quick break. Be right back with you guys. Dude, MasterCard. I want 428 on MasterCard. Dude, MasterCard had a fucking crash. MasterCard, I would have bought that shit too. These guys are buying the fucking dip, dude. How can you not say these guys didn't buy the... These guys bought the fucking market yesterday. These fucking guys bought the market yesterday. These guys came in yesterday and took... These guys bought a fucking... Dude, these guys came in yesterday and they bought the market. They got steals yesterday. MasterCard to 428. They made bank. Why couldn't I buy MasterCard at 428? Holy shitters. They got steals. I can't even imagine the people that got hit, that got wrecked yesterday in these trades. Can you imagine being a MasterCard bull from January 25th? Motherfucker. Can you imagine being long MasterCard from January 25th? Whole trade erased. Whew. Coming into this ER and you're like, been sitting in here, wasting my ass, wasting my time. And they literally took the whole trade down to 428. God damn. I would be so pissed. I got a buddy who's like a dividend bro. He like owns all like the UPS and the FedEx and all that shit. He was probably pissed last night. He must have been raging. No, dude. They bought, who do you think? You think you bought this down here? Who do you think bought that? You? Who bought that? You buy that? You didn't buy that. You think you bought that? The fucking bank bought that. They came in yesterday and they said that it was like having the candy store opened privately just for you down there. You want to get MasterCard and a discount at like $3.59 in the afternoon? Fuck yeah. How much? 428. Sound good? Sounds great. They discounted that shit. The fuck was that drop? Get the fuck on out of here. The fuck is that drop? Yeah. 13% drop. Get the fuck on out of here. It's a fucking crime scene down there. It's a fucking crime scene. I mean, what can you do other than laugh at that shit? I wonder where MasterCard is I wonder where MasterCard is for Q. If GDP is going to rage, right? If GDP is going to range for Q2 and Q3, can you imagine like what's the excuse going to be for Q2 earnings? Expectations for MasterCard was 20% profits. They reported 40% increase in profits. Burn it to the ground. What a fucking steal on MasterCard. That's a fucking steal. All right, I did Etsy MasterCard back in a little bit. I'm gonna take a potty break. I'm gonna go potty break, I'm gonna go pound like 3 double shots of whiskey. Just kidding. I'll be back with you guys in just a bit. Make sure you read that Wolf of Wall Street. Serious, make sure you read that stuff. Not Wolf of Wall Street, the Wolf Richter, Wolf Street. Read the comments section. It is hilarious. It'll have you in tears laughing. My God, MasterCard. Give me a dip, MasterCard. I'll buy 427, promise. Heads up to you. If you are a Discord member, if you're a member of the Discord, if you're a Discord member, I'm going to post for you right now. I'm going to post for you a brief from News Squawk for the Fed presser, the Fed announcement and presser today. So that just got posted in the Discord if you want access to it. Leave this up when I take a break. Expect some weakness as we come in to 2 p.m. And then you've got the presser at 2:30. Maybe we get some hedgies out of there. Is that what they call them? Hedgies? Laddering? I don't know what the fuck they call it, but Maybe back down there and then way up there. So no early squeezing going on right now. Whoop, we're up there. No early squeezing going on here yet. None of that's happening. All right, I'll be back with you here in a minute.
And you see where the US has imposed fresh Russia-related sanction on hundreds of people and entities, according to the Treasury websites. And within these sanctions, US does issue sanctions on over a dozen China and Hong Kong-based companies as part of the action. And doesn't it, US does target companies connected to Russia's Arctic LNG 2 project. Since it does also impose sanctions on Russian air carrier Pobeda, which is a subsidiary of Aeroflot.
And seeing the latest New York Fed reverse repo operation, they do accept 438 billion across 69 bidders. Does compare to Tuesday's 534 billion across 76 bidders.
And just see where the US FCC does move to tighten rules to bar Chinese telecoms, Huawei, ZTE and others from certifying wireless equipment according to officials.
Do. Do. Okay. Let's see here. What we got going on. Look at that doom and gloom. Look at, it's like Mordor down below over there. I got an order in for some calls right now, Binky, for 0 dates, brother. I'm long as fuck right now, Wink. I just saw that post from your brother on chat. Fuck these people. People out of their fucking skulls thinking they're getting a fucking rate hike today. Now, I don't know about, I don't know if this comes back down. It's like here and here. 505 is a nice number. I like that number a lot. These fucking, dude, these, Winky, these fucking doom bears. Like, let me ask you a serious question. You trying to fucking buy tops? Who the fuck's trying to buy tops? Oh, fucking out of their mind, Winky. They're out of their fucking skull, Winky. It's like 2 weeks ago, Winky.
So full spirit aero systems.
They come in and they shit talk on bottoms because they fucking didn't run it down.
To meet Boeing's rates and quality expectations for parts of the 77 MAX jets, according to Reuters, citing discussions with the company.
Winky, my brother, every fucking time we sell, we're down here buying, and these fucks are up there trying to say no. You know why? Because they didn't fucking sell the top yesterday. And they didn't make any money all day long on the downside. Where would you rather be buying, Winky? On tops? We'd be fucking poor, bro. We'd be poor, bro. I'm kidding you not. We'd be poor. These fucking clowns, Winky. They buy, like, they watch the rip, then they jump in. Then they scream. They scream at the tops that they're going long. They scream that we're going lower on bottoms. It never ends, Winky. You're just always going to win when they lose. Every time, Broseph. I'm telling you. Every time, Winky. You could run 0 dates at the close yesterday. Like, so yesterday's down move was an anomaly, right? Yesterday's down move at the end of the day was an anomaly. But think about this for, like, if a bull pulls their heads out of their asses for 2 seconds, if a bull pulls their head out of their ass, I'll take this risk every fucking day. Remember on Friday, Winky? So on Friday, I wasn't here, but I had the stream up. I was just talking to somebody about, I'm not going to say who, but I was just on the phone with somebody a few minutes ago, friend.
Commentary from the IDF Chief of Staff, stating that offensive operations in Gaza will continue in the same strength. Says that their forces are preparing for an attack in the north.
I was just talking to a buddy on the phone a minute ago, and I'm like, you know what? I'm like, I told these bulls that the correction wasn't over on Friday. I was like, I put the stream up on Friday, and then at the end of the day, I typed. If you actually go to Friday's stream, if you go right to about 3:45 in the afternoon, I posted a note, and I said, the correction's not over. And they thought it was. They thought it was over on Friday. And then I wrote him a note on Sunday and said it's not.
State Department after
Then I wrote him a note on Monday with crayons and said it's not over. So they're all they were like wrong on Friday, then wrong on Monday.
Has possibly laid off
they got smoked.
Employees.
And then we're down here at a shit bottom.
To CNBC.
They don't want to buy, dude. They want to buy tops. Bears want to buy bottoms. Bulls want to buy tops.
State Department's statement notes that U.S. issues sanctions.
And they're as loud as they can fucking be on both sides. I'd take this trade every day of the week for the rest of my life, and it served me fucking well. I'm still married. I have houses paid off. You know why? Because when we're in the shit like this, or we're exiting on tops and selling into somebody saying, bro, it's going to the moon. Winky. Dude, Q3, Q4 of 2023, I drank their Kool-Aid, man. I went through earnings season. Anything that popped, I exited the market. Had I just stayed in, I'd have been fucking rich. I probably would have. You remember when I was like, I got like 250,000 so far I made this year on this shit, and I was looking for 500,000, and then it went down to like 225,000. So fucking, had I just stayed in and not listened to these fucks, I would have been into this year, I would have made $1 million maybe. So every time, Winky, every fucking time we're down in these shit dumps, it's only like 10% of the stream, dude, that does this. That's it, like 10%. The 90 fucking percent are buying the fucking tops, dude. And the loudest fucking people in the room, Broseph. I love you, Winky. I love you, man. Yeah. We can recheck the downside, Winky. We can definitely recheck the downside, brother. I'm with you on that too. 100%. That is definitely on the table. But I'd rather be buying this shit than buying Friday's close. I'd rather be buying this shit than staying long on Monday's close. I'd rather be buying this right now and yesterday, right now, all day long. And I know doing that 10 times, I'm going to beat that other guy. Beat that other guy, beat that other guy, beat that other guy, beat that other guy, beat that other guy with a vengeance. And you do too. David AMS knows it. You know it. I know it. There's a few of them out there that know it. There's a few of them that know it. Talking about fucking raising rates today. They're on their fucking skulls if they think they're raising rates today. If they raise rates today, right, I will shave my head off on stream. Yeah, it started on, did you see the note? I literally drew it out for him. Did you see the note where I drew a note with a chart and I was like, no new high, no new high, no new high later in the day. New low, though. Shouldn't have had that one. Correction not complete. Still sell the rip. Didn't listen, dude. Fucking bears are out of their fucking skulls. This market is up and to the right. Up and to the right. You want to see it? You want to see it? I'll show it to you. I got it all on paper. I send it to everybody every night. Yeah, that would be, right, the rate cut. Absolutely, Winky. I don't like rate cuts, dude. No rate cuts. No rate cuts, no bueno. No bueno, bro. They got bulls saying that's good. I'm like, they're out of their minds on that one, too. It is bullish. You goddamn right it's bullish. How do you get the market brief? Okay, so we did this completely free for 3 years. 3 years. Never taken a sponsor, never made a deal, never did anything. Nothing. Not a fucking thing. Just cost money, cost time, money, everyone involved. But for us to make the jump, we either got to shut it down or we're going to make the jump. So we're trying to make the jump right now. We got a beta website.
Commentary from ECB.
It isn't even alpha yet. We haven't even actually launched the legit shit yet. It's almost there, but not quite.
Targets in mid-2025.
But what you do get is if you remain free, you get more consistency. You get more streaming. We're going to try to do streams every day for this year, I believe it or not. So your experience, yeah, that's right. Keep going up there. Should be enhanced. Now, 1:36 in the afternoon. We got a half an hour until the release. Now, if you do want to support what we're doing, you can go to tradethetrigger.com. And I think it's $32 a month if you sign up for the year. It's dirt cheap. You get trigger charts with velocity twice a day for like 12 tickers. You get market briefs. You get bonus content. You get Elliott Wave shit. You get a bunch of other cool shit. You get the Discord. Hey, in our Discord, dude, listen to this shit. In the Discord, right? In the Discord, you get access to like tradie ticks and unusual whales premium bots. Like you just go in there. That shit costs big money. All on its own. You get the Discord. You get mentors and traders in there that trade and walk you through trading 24 hours a day. If you trade futures, I'll put my futures traders up against any futures trader, any Globex trader in this market. I will fucking put my traders against. I guarantee that my futures traders, I'll guarantee it right now, my futures traders are the best out there. The best. And they live like kings. That's true. We don't sell any prop firm shit. We don't sell anything. $32 a month. If you want Pro Trader gets outlooks that are like a year in advance, weeks in advance, months in advance. They get the whole market. They get everything that's coming out on seasonality. So they get fucking commodities. They get metals. They get crypto. They get obscure shit, like all kinds of obscure shit. They get earnings outlooks before we ever get there. On the regular. That's right. But to not have the market brief is insane. Pure insanity to not have it is insane. And when you can go back and look at them all too and be like, he was right. 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 Oh, he missed one. But he gave the counter trade. Shit, he was right. You're not getting the indecision from me. You're not getting the, we could go here, or go there, or go here. You're not getting the bull case, the bear case, and the sideways case every night. You're getting the CaptainJimJames thinks we're going there.
Just a bit more from ECB's because it does make that risk to the inflation outlook and balanced. It says transmission remains a downside risk to the growth outlook, and transmission in the latest cycle is also stronger than in the past.
Do 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 do. Do 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 do. That's right, J Powell's mom. Yeah, I was gonna add some more, and I was like, I'm done. Like, no more money. I'm done. If we have if we prolapsed and collapsed yesterday, I was like, I'm fucking done. But if it prints, whew,
And just you a tweet.
woo, if it prints, baby,
Tells me the Baker
we're gonna be rich.
boosted its official oil production capacity to 4.85 million barrels per day.
That's right.
The company's websites. Which does just note the
That's right.
5 million barrel per day target.
Prolapse the collapse. Like what's like what I'm trading is like 1% of my account on 0 dates. You guys don't follow me in the big trades though. I remember Winky and I were sitting in the chat 2 weeks ago, right? You remember this? Hold on here. You remember that Friday? I do. You remember that Friday? Remember that Friday close? I remember we were loading the boat. Our chat was, you could hear a pin drop in our chat. Pin drop. Boom. There was like maybe 5 of us. 5 of us. Here, a pin drop. Now we're down here again, aren't we? There's 1, there's 2, there's 3. I'll take that risk again. I'll take that risk. And if we roll, I'll take that risk again. They've served me very well. Served me very, very well. So that I can trade 0 dates. Served me very well. Yeah, still holding cigarette and all that kind of stuff. All right, so I'm going to set up. So I want you guys to listen closely here. Get on Twitch if you can. You should get the rate decision first from us. You should. If we don't, I'm going to change the service to trade the news. And very soon we're going to switch this service to only for pro traders or maybe supporters in the Discord. As this stuff comes in, I will give you brief. Hawkish, I'll say to you hawkish, or I will say to you dovish. Hawkish, dovish, hawkish, dovish, and let this guy speak.
And just so you're aware, US LNG developer Tellurian does really send home workers from its upstream gas production business, according to sources. Tellurian has been holding talks with potential buyers to sell its Haynesville shale gas business, according to sources via Reuters.
On your bottom screen down below here, I'm going to change From the bottom screen down below, I'm going to change the chart I'm going to split it. This is HYG. This is the Dix. And this one over here is going to be the 10-year yield curve. Yield curve weak right now. The belly trade is what you want to be paying attention to. That's the 2s and the 5s. 10-year yield trade is out of favor at the moment. 10s and 30s out of favor. We'll then switch over to the Federal Reserve interview at 2:30. Tell me in the chat, are we going up or down or flat? Up, down, or flat? Up, down, or flat? I want to know in the chat your expectations. Will SPY SPOOs go up, down, or flat? SPOOs, up, down, or flat? Let me know in the chat.
And 10 minutes now till the FOMC statement release, where they're expected to hold rates at 5.25 to 5.5%. There are no new SEPs or dot plot due at this meeting. It's worth noting that the strong incoming data, which alludes to sticky inflation and a largely robust growth trend, are likely to keep the central bank cautious in rushing towards any easing policy. While the recent meeting minutes did state that almost all participants judged it would be appropriate to pivot to a less restrictive policy stance at some point this year, there's been a notable shift in tone in recent weeks' Fed speak from officials to the hawkish side, backed up by some recent articles by WSJ's Timoros. And it also comes on the heels of the hot employment cost index on Tuesday, raising fears of inflation pressures down the line. Accordingly, traders will be attentive to the degree to which Chair Powell, whose presser begins half an hour after the statement release, looks through recent upside in inflation data to gauge when it may begin its rate cutting cycle, or if Timoros is anything to go by, perhaps alluding to the lack of rate cuts we may have going ahead. There are also expectations for the Fed to confirm its QT taper plans, although there are some tail risks that may be delayed.
Eight minutes left.
And just over 5 minutes now. Just a quick look at Fed pricing. Currently have 30 basis points of cuts priced for the year.
Yields falling right now. Dixie holding fine. HYG climbing slightly. Another neat thing to be following right now would be the 2s and 5s. Remove this right now. Three minutes left. Just a note, if you're just joining us right now, we have a real-time news squawker. And as these headlines are released, if there's any commentary, the only thing you'll get from me is hawkish, dovish. We'll then have Jerome Powell on in real time as well later. And I will post the full report and presser to you in the chat. That's what I want right there. Bam, up, down for the news squawker, and then straight up again. Thank you for joining us today, by the way. If you want real time, go to Twitch. If you're on YouTube, if you go to the cogwheel in the settings and speed up the broadcast 2 times, it will bring you to real time as YouTube natively delays.
Where rates are expected to be left unchanged at 5.25 to 5.5%.
US 10-year now trading 4.6445. That's the yield.
30 seconds. Ten seconds. Rates unchanged as expected. Fed will slow decline the balance sheet by cutting Treasury redemption cap to $25 billion per month from $60 billion starting at June 1st. And Fed maintains MBS redemption cap at $35 billion per month. Will reinvest excess MBS principal payments into Treasuries. Fed says it does not expect will be appropriate to cut rates until it has gained greater confidence inflation is moving sustainably towards 2%. So that's left unchanged, that guidance. It says risks to achieving employment and inflation goals have moved towards better balance over the past year, as opposed to are moving into better balance in the March policy statement. Does say economic activity continues to expand at solid pace. Job gains have remained strong. Unemployment rate has remained low. It does leave the inflation guidance saying inflation has
86 fucking cents, baby.
Fed votes was in favor of policy was unanimous.
505C's ripping.
It does highlight in the release there's been a lack of further progress towards 2% inflation, it says in the statement. So while it does say inflation has eased over the past year but remains elevated, as the statement previously said, it adds that line in recent months there's been a lack of further progress towards the committee's 2% inflation objective. And as already mentioned, beginning in June, the committee will slow the pace of decline of its security holdings by reducing the monthly redemption cap on Treasury securities from 60 billion to 25 billion. And analysts were expecting that to be halved, so slightly more than expected for the QT taper for Treasuries. And the committee will maintain monthly redemption cap on agency debt and agency MBS at 35 billion.
One negative part here, Fed saying risks to achieving employment and inflation goals, quote, have moved towards better balance over the past year, as opposed to our moving into better balance.
Earlier ranges have seen two-way flow after the statement release. Stocks also just a bit above pre-announcement levels.
Traders see Fed rate cuts most likely in November. In November, rate cuts.
Dollar weakness here.
Oh, yeah, Q4, baby. Tell them. Let's do some gambling. I know, Winky. We're going to do some more gambling. Meanwhile, prime banks pissed off because they positioned for a rate cut. Now they got to wait until Q4. All right, we're going to move to the 2s and 5s now as the 10s and 30s aren't paying us. Fuck you, Fed. Dixie going to the depths of hell right now, trading 106.05. HYG being held back slightly right now on the half-hour trigger, trying to get above and trade 76.83.
With 32 bits of cuts priced across the year now. That's 30, just under 30 bits before the data.
Yields looking for a place to grab some liquidity to go lower at 4680, and then bloodbathing down to 4.622. Market relief right now. You hear a bear talk, and they're like, well, the 10s are up right now. 10-year yields up. Market should crash. It's duration. Suck it, 10-year yield.
It's time.
Suck it all day long, 10-year yield. It doesn't matter, though, right now, right, Bears? Doesn't matter right now, right? It matters when it matters, Cap. Only when the market's going down does it matter. Dixie blooding it right now. HYG trying to explode to the upside. The yield's getting hammered right now. Hammered. Spoo's trading 502.05. Trying to get up in trade 501 for me, please. 504.18, I mean. Get up there and tag me some fucking hourly trigger, please. Smash it. Dixie getting shanked. I'm going to read some stuff for you right now really quick. U.S. interest rate decision was 5.5% as prior. Nothing has changed. The Fed will slow the decline of balance sheet by cutting Treasury redemption cap to $25 billion per month from $60 billion starting June 1st. Woo! Woohoo! That's dovish. Inflation has eased over the past year, but still remains elevated. Yada, 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 data dependent. Economic activity continues to expand at a solid pace. I'll say it again to you. Economic activity continues to expand at a solid pace. Job gains have remained strong. Unemployment rate has remained low. Of course, you ripped the golden spoon out of Wall Street's mouth yesterday with them finding out your wages are going up. They'd prefer for you to work for free, maximize profits, but GDP is going up, so they're going to make money anyways. The Fed does not expect it will be appropriate to cut rates until it has gained greater confidence inflation is moving sustainably towards 2%. We all know that as long as rates stay up and the Fed continues its operations, the market is relatively safe. That the poise of institutional selling on rate cuts is out the fucking window for right now. U.S. short-term interest rate futures contracts rise after the Fed releases May 1st FOMC statement. Traders see Fed rate cut most likely in November. Bye-bye, banks. You gotta wait. Set that shit up in September again. Traders see small chance of no Fed rate cut this year. After the FOMC meeting, we now await Jerome Powell coming out at 2:30. Many are claiming that the Fed is going, or Jerome Powell is going to take a hawkish tone, lamenting that the Fed is going to scare you with rate increases in June. In all likelihood, that tone is not because they're going to raise rates in June, as was just stated, that they're not going to raise rates in June. They're not. But they're going to scare you. Why? Because Janet Yellen yesterday told Larry Summers to eat a bag of dicks. They're going to try to scare homeowners. Instead of homeowners waiting for a rate cut, he's going to tell homeowners, you should expect rate increases down the road. The economy is robust. Employment is robust. You should sell your home now, or you might be paying higher rates in a year or two. That would be a W for the Treasury Department, for Janet Yellen and Jerome Powell. Why? Because it alleviates the cost of housing. Their main focus at this point will likely be telling homeowners, you think 5 or 7.5 is a lot? You should wait until next year. The white bar over here on the right-hand side is when Jerome speaks. We will have him on the show live for his presser with commentary in real time from a news squawker. Hey, Winky, did you see the Reddit post yesterday where they asked if you're in your 30s to 50s, what are your hobbies on Reddit? Like the top comment was hilarious. My hobbies are I write indecisive, illegible comments on Reddit or something like that. It was great, dude. You gotta see it. The comment section was outstanding, brother. Do you want me to post it on Twitter when it comes out? I used to do that. I used to post it on Twitter before it came out. I don't do that anymore. Don't bother. Too busy. And I will say this to you. You do want to be paying attention to what Jerome says in this rate decision. The expectation at this point is basically what Nick Timiraos is saying. You're going to get ultra hawk Jerome. There's bears out there right now, short as fuck. I just posted to you the Federal Reserve statement in the chat. You want to be looking for a tonal change from Jerome Powell. And does it lead to any kind of intermediary downside move due to his supposed hawkishness? I would point out to you, though, that Jerome poured out Nick Timiraos the last Fed meeting. He used Nick Timiraos like a vibrator last Fed meeting. Why? Because he was accused of pandering to the election cycle. Nick Timiraos came out, blah, 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 blah. And the presser was the diametric opposite of the diarrhea Nick Timiraos posited the day of the Fed rate decision. So let's see, because today Nick Timiraos is saying what? I'll read it to you. The Fed whisperer. He kind of got choked out last time. He wasn't whispering, was he? Timiraos saying, not only is the chances of a June cut dead, but, quote, the question now is whether the data instead will make this week's meeting a way station to a more hawkish summer pivot. So Timiraos is telling you, oh, you're getting a fucking rate increase in June. Meanwhile, traders are telling you, LOL, laugh my fucking ass off, ROLF, LMFAO, whatever the fuck they say. There's no way there's no way they're raising rates until November. Why would you wait until November? You'd wait until November so that you can react to a strong economy, strong GDP, allow employment to grow, allow the economy to grow so they can react to it. You got people out there saying, oh, no, don't let it grow. We're going to smash it down right now. And you know, if you look at any of those charts going down from the 1950s, we're at the bottom of the barrel. We got some room to grow the economy. I know you don't think so, but we do. We got some room for people to join the economy and get back to work. Still, we are still below 2020 employment levels. The only scaring that Jerome has to do today is to homeowners afraid to sell their homes. He needs to tell realtors to fuck off and to get their people to sell their homes because rates are going to be higher down the road, baby. "14 minutes until Jerome Powell speaks. We're going to change. You know what I'll do is I'm going to put Jerome Powell on the bottom right-hand side over here. I'm going to switch it up a little bit today. Give me just one moment. Normally I do the rate decision graphics and all that, but I think today we'll leave Spoos up. And down below, we're going to bring up Jerome Powell so he can speak to you. Tell me in the chat. Which colored tie does he wear? So we had the up move and the initial reaction on the presser. We got 505Cs doubled in price. We've got a yield curve grab up above, then it blooded. We got Dixie that got blooded. We've got HYG trying to break out to the upside. You've got bond traders switching to the belly, 2s and 5s now. Do we get an up or down move? Do we get some weakness on Nick Boy Timoros? And then an up move. Whoa, 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 whoa. Do we go up or down? Do we start down? What color tie does he wear? Yellow, purple, red, green, pink? Does he wear purple? Tell me purple, maybe. Dip and rip, right? There's a bunch of shorts out there going, we're gonna fuck a bunch of hedge funds like we're gonna fuck this guy. Watch, we did it yesterday and today. He called it right. We're gonna get his ass today. Maybe if Bork is here, he can run a poll. I'll have the video up for you at 2:25 in the bottom of your screen down here. What color tie does he wear? Do you think he goes with the purple again? Or does he go red? I want to draw your attention before we get there, and I want to show you one quick thing, if I may. If you're just joining us, I did show this last night and this morning. We went over it. I want to give a super high five to specifically to Gamma Labs and Volatility Wiz. And this is the vol curve. There's no vol on FOMC today. None expected at least. But on Friday for the NFP print, there is volatility expected. So no volatility expected until Friday. Then there's an expectation of vol falling off into Monday. There's a slight expectation of volatility into the 10th. But it dumps again into the 15th and 16th. Now, the posit here is that volatility is not priced into the PPI print that comes out before the CPI print this month on the 16th. That they will price in a higher vol curve as we get towards the 16th. So if you're going to take a volatility trade, you would be on a calendar spread selling volatility on Friday and then rebuying volatility on the 6th. On the 6th, buying volatility for unrealized vol on the 15th.
And just under 10 minutes now till Fed Chair Powell's presser and Q&A. Have posted a live link to watch it to the headline feed, although we'll be going over all comments, or relevant comments at least, from Powell over the squawk.
Yeah, the Fed members are all patting each other's back so hard right now. Options burning up premium. Always remember rule number 1. Zero dates are directional. If you get a print, you take the print. Rule number 1 in the zero date Bible is what? You get a print, you take the money and run. You go back in for another one, you take the money and run. Meow, meow. 10-year yield was trying to claw itself back just to get blooded again. Dixie looking to get blooded again. HYG is like a throbbing what? HYG wants to fucking pump. Don't forget, as volatility comes off of today, whatever was here should be a throbbing vol killer. Six minutes until the presser. 6 minutes. I tried to turn ads off just now. If you get an ad, let me know in the chat so I can turn them off. Well, it asks me to turn them off. It says, you want to turn them off? And I did. So hopefully they're off for you. You want me to do what? Draw you a path? I did draw you a path. I drew you a path this morning in the market brief. Last night, I drew you a path. I told you where we were going today, didn't I? Ask one of your friends where I told you we were going today. I told you we were going yesterday, too, and you didn't believe me. I tell you every night. I give you a market brief every night. And I'm wrong every once in a while, but 90% of the time I'm right. So I'll take that. I'll take that as I bet you I beat most traders in the market. I don't give you every direction. I tell you where I think we're going every night. Sign up at tradethetrigger.com for the market brief. You want to know where we're going? Sign up. Spoo's now trading 502.25. $502.34. Treasury dumping. Dixie dumping. HYG is throbbing. Trading 502.40, 502.50, 502.52.
Wants to post FOMC highs now. S&P futures going positive on the session. Nasdaq still negative by 20 basis points. But most strong gains seen in the rate sensitive Russell 2000 up 0.5% on the session. Meanwhile,
Yeah,
Treasuries
baby,
on
slap that
standing higher from
motherfucking
the
ass.
and their post statement levels. And in terms of Fed pricing, it haven't really moved much. Still
Be aware
basis
in
points
all of your
40
excitement
year.
right now, you're all hot and bothered and hot and sweaty. To remember that in 3 minutes, we do get some volatility. Might not be a bad time to take a little bit off right now. Second repricing right now of options going on. Should get 2 or 3 repricing of options. Should get a repricing of options when he starts to speak. Should get a repricing of options after he's done. Should get a third repricing of options at the end of the day for a new trade for tomorrow on Thursday. We go over this every fucking rate decision, right? Remember the things that I teach you every rate decision about zero dates and about the repricing of options as we make our way through the day. You can be directionally right, but still be upside down. Hourly trigger stands where? 503.18, baby. When they tell you they're going to grab your balls, you don't know where the bottom is. You do. Because we tap the weekly trigger, don't we? And the daily trigger. And the hourly trigger. Where's the daily trigger right now? Anybody know? I know. You can get the daily trigger with us. You can get velocity with us. Daily trigger sits at 508.21. 508.21. Tell your friends if you have the triggers and velocity, tell your friends where the hourly velocity is right now on a 30-minute basis. Tell your friends. Where is hourly velocity on a 30-minute basis on SPY? Give it a fucking kiss for me, please. Oh, yeah. Oh, fuck yeah. Oh. If you don't know what the triggers and the velocity are, join us on tradethetrigger.com. Don't know what we're talking about when we say we put out briefs every night. Cover the entire market, currencies, metals, commodities, meme stocks, indexes, crypto, you name it, we're covering it.
Powell says economy has made considerable progress towards its dual goals. Inflation has eased substantially over the years, but is still too high. Inflation is still too high. Further progress is not assured, Powell says, and says the path is uncertain. Says we are fully committed to running inflation to our 2% goal, and this is a copy-paste of his last presser. Powell says restrictive stance has put downward pressure in inflation and the economy.
Want to know where resistance's support is? Follow along.
He does note inflation has shown a lack of further progress, and we are highly attentive to inflation risks. He does add that line as seen in the statement. He says private domestic final purchases was as strong as second half of last year. He says that is an important underlying signal for demand.
Half-hour trigger holding right now.
Says the labour market remains relatively tight.
If you took the money on the hourly trigger to the pinstrike, congratulations. You're following along. Still no audio right now from the Fed.
To 25 to 54 years, and the continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased.
Does note nominal wage growth has eased over the past year. I have said this before.
In March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%.
We're in real time now.
The inflation data
Powell
received
says
so
inflation
far this year
data
have been
received
higher
this
than
year has been
expected.
higher than
Although
expected.
some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment.
Yeah, that's right. That's right.
Considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline.
Yeah.
Consistent with the plans we released.
Yeah, Bulls.
Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1.
Ooh.
Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month.
Working on that debt, baby.
The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise.
No, but you're getting a better rate with the dollar higher.
Level more gradually.
You're skimming some of that spending off the top.
The pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing
You want me to explain this simply later? I will to you.
that are consistent with reaching the appropriate level of ample reserves.
It's not QE. It's exchanging a more expensive dollar for a cheaper dollar later.
Longer-term inflation expectations.
A more expensive dollar now for a cheaper dollar. And the idea of a cheaper dollar, he's telling you the dollar is going lower.
Over the longer run.
That means stonks go up.
We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to...
Trading 503.67 right now.
We'll do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Howard Schneider with Reuters. A question to follow up, if I could. Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor.
Slap that fucking ass.
It's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw it, more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also look at we look at surveys of workers and, surveys of workers and businesses and ask workers, are jobs plentiful, and ask businesses, are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess.
So
Oh, here comes the fucking bear reporter.
I believe it is restrictive, and we believe over time it will be sufficiently restrictive
Ooh!
that the data will have to answer.
So as a follow-up, if inflation,
Pardon me.
Throwing Nick Timrose under a fucking bus.
the job market stays reasonably strong, unemployment low, and expectations are
Higher for longer, no rate increases in June. Suck it, Timrose.
are anchored,
Or anchored.
stable. roughly. Would you disrupt that for the last half point on PCE?
You know, I don't want to get into complicated hypotheticals, but I would say that, you know, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
Fuck you, Bears. Fuck you, banks, and your rate cut roll in the market.
Thanks for taking our questions, Chair Powell. I wonder, you know, obviously, Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well, and if so, what change in conditions would merit considering raising rates at this point?
So I think it's unlikely that.
Give me that premium kick, baby.
I'd say it's unlikely.
Hit 510 so we can get a 520 premium kick.
As mentioned, which is how long to keep policy restrictive.
Oh, yeah. Remember yesterday at the close, right?
We need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that is what it would take. We'd look at the totality of the data to answer that question. That would include inflation expectations, and all the other data too.
Would that be like a reacceleration?
I love you too, Mary Garrison.
Well, I think, again, the test, what I'm saying is if we were to come to that conclusion that policy weren't tight enough to achieve that, so it would be the totality of all the things we'd be looking at. It could be expectations, it could be a combination of things, but if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Chris.
Thank you, Chris Rugaber at Associated.
Mary Garrison, you're now a moderator.
That rates are at a peak.
Mary Garrison, you're now a moderator.
It might be appropriate to cut rates later this year, as you have at previous press conferences. So has the Fed sort of dropped its easing bias?
Take the money and run. Get out and take your fucking money.
Let me address cuts. So obviously,
Take your money.
policy rate are going to depend on the incoming data, how the
Oh, you're welcome, Mary.
the balance of risks, as always, and we'll look at the totality of the data. So I think, and we think, that policy is well
Be ready to break out that baseball bat, Mary.
paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down.
Oh, yeah. Tell him, Jerome.
So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on rate cuts.
Tell him you want to grow the economy, Jerome.
Other paths that the economy could take.
That's right, Jerome. Tell him you want to grow the fucking economy.
Rate cuts, and those would be, two of those paths would be that we do gain greater confidence, as we've said.
That's right, Jerome. Tell him.
Sustainably down to 2%. And another path could be
Robust.
an unexpected weakening in the labor.
We want a robust economy.
Other paths in which you could see us cutting rates. So I think it really will depend on the data. In terms of peak rate, I think really it's the same question. I think the data will have to answer that question for us.
Well, and could you just follow on the path where you might not cut? Is that, you mentioned that it would be inflation persistent.
Send them to Detroit.
Is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, we've set ourselves a test that for us to begin to reduce policy.
Spy about to trade back to 510.
Moving sustainably down to 2%. And for sure, one of the things we'd be looking at is the performance of inflation. We'd also be looking at inflation expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
Nick.
Nick Timrose of the Wall Street Journal. Chair Powell, to what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained tighter financial conditions will be needed to resume the sort of disinflation the economy saw last year?
So I think it's hard to know that. I think we'll be able to look back, from down the road and look back and understand it better. if you look at, let's look at growth. Really, what we've seen so far this year in the first quarter is growth coming in about consistent with
What up, Leroy?
GDP came in lower. But
Watch. I want you to be watching Bookmap here.
Financial conditions loosened in December, and that caused an uptick in activity, and that caused inflation. Presumably, that's what, or tightening in the labor market. You don't really see that happening. What you see is economic activity.
Watch out for the roll.
Level that's roughly the same as last year. So, what's causing this inflation? We'll have a better sense of that over time. I don't know that there's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given.
Tell them the economy is fucking growing. You want it to grow some more.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view?
He used you as a tool again, Nikki.
If it was accompanied by signs that wage growth was reaccelerating.
So I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year.
Say it!
Strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply side distortions and demand side distortions, and there's also monetary policy, restrictive monetary policy. So I wouldn't rule out that something like that can't continue. I wouldn't give up at this point on further things happening on the supply side, either because we do see that that companies still
Nick's pissed
that there are supply side issues that they're.
He's got the stink face on.
When the supply side.
He's like, I just got whored out twice in a row.
Time for that to affect economic activity and ultimately inflation. So
he's not the Fed speaker anymore. He's the Fed bitch.
Strong either growth or a strong labor market in and of itself would automatically create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else.
Banks do, though. They get stinky about it.
But we also want to see them not eaten up by high inflation, and that's really what we're trying.
That's right. That's right. Tell them Wall Street hates that shit.
And work with what's happening on the supply side to bring.
Wall Street have your ass work for free if they could.
Part of that will probably be having wage increases move down incrementally toward levels that are more sustainable.
Oh, dude, he just shit all over him again.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. You talked about needing time to gain more confidence that inflation is sustainably moving back down to 2%. It's May now. Do you have time this year to cut 3 times, just given the calendar?
Yeah, I'm not really thinking of it that way.
Bulls in control still.
What we said is that we need to be more confident, and we've said, my colleagues and I today said, that we didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of confidence.
That's right. That's right. That's right. End of year, maybe March.
That when we get that confidence, then rate cuts will be in.
I like the Goldilocks.
I don't know exactly when that will be.
I like the soft landing right now.
Any signs that you can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings. So I think you're at a point there where you should take some signal. We don't.
Maybe Q2 and Q3, Jerome? Maybe Q2 and Q3?
Appropriate to take signal now, and we are taking signal. And this
a little too early, isn't it, Jerome?
Is that it's likely to take longer for us to.
Yeah, tell him, Jerome.
That we are on a sustainable path. Then.
That's right, sustainable.
That's the signal that we're taking.
Yeah, you want to see the economy expand a little bit in Q2 and Q3.
Mr. Chair, if I could, Steve Leisman, CNBC, if I could follow up on that. what particular areas were sort of temporary or blips in the inflation data in the first quarter, and what's the dynamic by which you expect them to work out in the coming
Fucking party time, baby.
So we will.
We're going to let GDP rip Q2 and Q3.
I will say nothing is going to come out of that that's going to change the view, I think, that in fact we didn't gain confidence and that it's going to take longer to get that confidence. I just...
Dude, Nuck and Futz, man. Dude, they were all over me last night, bro. Fucking they were all over me, dog. At the close.
Goods inflation than expected, and you've seen higher non-housing services inflation than expected, and those two are working together to sort of...
They were all over us, bro. They were over you, too. They were dogging you, dog. They were dogging you, Nuck and Futz.
And,
they were dogging you, brother.
Is that we will, over the course of this year...
They were barking all up our asses, weren't they?
That's my forecast. I think my confidence in that is lower than it was because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to...
No, you bears are fucked, by the way. I don't know if you know this, but you are fucked.
Those will show up in measured housing.
They're gonna rip the fucking roof off for 2 quarters.
It will. It looks like that there are substantial lags between when lower market rates turned up and for new tenants.
You are super hella fucked. 1% move expected today. Remember from this morning?
If I could just follow up, is there a bit of a contradiction in the idea that you are reducing quantitative tightening, which is sort of an easing, while you're holding rates steady at a restrictive rate to try to...
Yeah, that's right. They're not going to sell the market on that shit, are they?
I wouldn't say that, no. I mean, the active tool of monetary policy is, of course, interest rates. And
that's right. It's interest rates.
A plan we've long had.
Oh, dude, I fucking love you, Jerome.
Slow, really not...
I fucking love you.
To provide accommodation for the economy, or to be less restrictive to the economy. It really is to ensure that the process of shrinking the balance sheet down to where we want to get it is a smooth one and doesn't wind up in...
oh, he looks great in purple, doesn't he?
It did the last time we did this, and the only other time we've ever done this.
Craig.
Oh, yeah, it's sweet music. It's sweet music. Sweet, sweet, sweet.
2 questions. First,
sweet music to the market.
Since March, has the probability in your mind of no cuts this year increased or stayed the same? That's the first question.
Did that guy's hair get blown back in just this interview?
You joined the board.
Did this presser fuck up his hair or something?
I'm sure you remember, as I do, what the jobless recovery...
He's a fucking bear. Look at his hair. He's like, oh, shit.
Accountants, all kinds of highly qualified people who couldn't get jobs. And given your history there, I wonder if there's an argument for being more patient with inflation here.
That's right.
We have strong productivity growth. That's helping wages go up. We have good employment. And so it seems to me there's a lot of hysteria about inflation. I agree. It's, nobody likes it, but
I like this guy.
For being patient and working.
I like this fucking guy.
Get it down over time. Thank you.
So on your first question, I don't have a probability estimate for you, but all I can say is that, we've said that we didn't think it would be appropriate to cut until we were more confident that inflation was moving sustainably on at 2%. We didn't get, our confidence in that didn't increase in the first quarter, and in fact, what really happened was...
you need some growth, don't you?
It will take longer to get that confidence, and I think I think it's, the economy has been very hard for forecasters broadly to predict its path, but there are paths to not cutting, and there are paths to cutting. It's really going to depend on the data. In terms of the employment mandate, to your point, if you go back a couple of years, our sort of framework document says that when you look at the 2 mandate goals, and if one of them's further away from goal than the other, then you focus on that one.
Tell him about men not working.
Times how far it is from the goal. And that was clearly inflation. So our focus was very much on inflation. And this is what we referred to in the statement. As inflation has come down now to below 3% on a 12-month basis, it's become, we're now focusing, the other goal, the employment goal, now comes back in to focus. And so
Remember,
focusing on it.
remember yesterday.
That's how we think about it.
Into the bell. Remember the last half an hour. Remember the end of the day. Remember what you were being told by people.
Financial Times, thanks a lot for the opportunity to ask the questions. Just to go back to the answer before the previous one, it seemed to suggest
Tell him, Green Man.
the likeliest path of inflation is one that's going to allow...
You're not going to get it until you get over 510, then you get the premium kick.
rates are lower at the end of the year than they are right now. It would be good if you could just confirm whether or not that's a correct reading. And the Q1 GDP print is...
You need dealers to give you a premium, a little bit of a snort.
To the U.S. economy. Do you or anyone else on the FOMC think this is now a risk? Thank you.
Yeah, I'm not dealing really in likelihoods. I think there are paths that the economy can take that would involve cuts, and there are paths that wouldn't. And I don't have great confidence in which of those paths. I think I would say my personal forecast is that we will begin to see further progress on inflation this year. I don't know that it will be sufficient. I don't know that it won't. I think we're going to have to let the data lead us.
Oh, this is pissing banks off right now.
Your second question was stagflation. I guess I would say I was around for stagflation, and it was 10% unemployment. It was high single digits inflation.
Tell them.
And very slow growth. So right now we have 3% growth, which is pretty solid growth, I would say, by any measure, and we have inflation running under 3%. So I don't really understand where that's coming from, and
comes from FinTwit, bro.
Most forecasters, including our forecasting, was that
about to squeeze here.
Level of growth was very high.
About to squeeze.
4% in, I guess, the fourth quarter, and probably not going to be sustained, and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level.
We become slightly supportive at 5099 or 5100 on SPX.
That won't be.
We become slightly supportive even though the gamma flip is higher.
Michael McKee from Bloomberg Radio and Television. The vice chair of the FOMC said recently that he's willing to consider the idea that potential growth has moved up, and of course he's Mr. Potential Growth, our star. Do you share that view, and would that imply that maybe policy isn't tight enough?
Oh, Christ. Fucking guys.
I would take that question this way.
Larry Summers, suck a dick.
High productivity growth.
Sit down in the back, Larry.
And we saw a year of, I think, negative productivity growth in 2022. So I think it's hard to draw from...
Gamma flip is at 5107 or 5108.15 or somethhan. That's where I've got it.
Above its longer run trend. I don't think we know that.
I've got market beginning to get supportive at 5100.
We've had what amounts to a significant increase in the potential output of the economy that's not about productivity. It was about having more labor, frankly, both through, in 2023, both through participation and also through immigration. So we're very much like other forecasters and economists getting our arms around what that means for...
Yeah, we got expansion we need. We need some expansion in the the economy to the upside.
In that case, I think you really do have a significant increase in potential output. But you've also got... So you've got more supply, but those people also come in, and they work, they have jobs, they spend. So you've also got demand. So
SPX about to squeeze here as well.
You get more supply than you get demand at the beginning, but ultimately it should be neither inflationary nor disinflationary over a longer period.
Well, you said earlier that at this point you're not really considering rate increases. If growth is higher, but you're not considering rate increases, does that imply that you're more worried about causing the economy to slow too much?
Yes.
you are about inflation taking up.
Yes, yes.
No, I think.
Yeah, you lied. You know you are.
Our policy stance is in a good place and is appropriate to the current situation.
No, it's exactly. Leave the policy in place. Let the economy grow.
Our evidence for that I went over earlier. You see it in the labor market. You see it in inflation-sensitive spending, where demand has clearly come down a lot over the past few years. And that's more from monetary policy, whereas the supply side is happening more on the supply side. So that's how I would think about it.
Ooh. This is some resistance up here. Be careful watching the squeeze right now. SPX coming into its first real resistance.
A lot like a steady state, and we have 3% inflation. So if the data remains the same that you're seeing.
Take note down here of the first resistance bars we're coming into.
3 to 2% inflation. So was there any discussion about a rate?
The gamma flip is the red line right here. This is current.
Are you satisfied with
gamma flip
3% inflation for the rest of the year?
Well, of course, we're not satisfied with 3% inflation.
You've got a target right here.
Can't be in a sentence with satisfied.
You got gamma flip right here.
So we will return inflation to 2% over time, but over time. And we think our policy stance is appropriate to do that. So if we were to conclude that policy is not sufficiently restrictive to bring inflation.
Oh, God, yes.
That would be what it would take for us to. We don't see that evidence for that.
About a rate hike.
The policy focus has really been on.
I love all of you out there.
About holding.
Did you get my market brief last night?
That's part of the policy. That's where the policy discussion was in the meeting.
Did you get my market brief last night? Tell me right now.
That would trigger a rate hike.
There isn't any rule. You can't look to a rule.
Did you get my market brief last night? Tell me. Yes, you did, right?
Restrictive monetary policy needs more time to do its job. That is pretty clear based on what we're seeing. How long that will.
Did you get it the night before when I told you we were going down? Did you get it last night when I told you it was going up?
Victoria.
Have I taken you down and up in 2 days?
Politico. You've talked about your commitment to being apolitical and nonpartisan, and I was just wondering, given that it's
I love you out there. What up, Blackout News Network?
Close to an election, and similarly, is there a significant...
Are you zigging and zagging? Are you zigging and zagging?
Versus December.
So we're always going to do what we think the right thing for the economy is.
That's right, Binky baby.
Consensus view that it's the right thing to do for the economy. That's our record. That's what we do. We're not looking at economics right here. These are difficult things, and if we were to take on a whole and use that as a new filter, it would reduce the likelihood we'd actually get the economics right. So that's how we think about it around here. And we're at peace over it. We know that we'll do what we think is the right thing when we think it's the right thing, and we'll all do that. And that's how everybody around here thinks. So I can't say it enough that we just don't go down that road. If you go down that road, where do you stop? And we're not on that road. We're on the road where we're serving all the American people and making our decisions based on the data and how those data affect the outlook and the balance of risks.
And then is there a significant difference between, whether you start in, say, September versus December?
There's a significant difference between an institution that takes into account all sorts of political events and one that doesn't. That's where the significant difference is. And we just don't do that. I mean, you can go back and
price getting above the daily trigger. Bulls, what are you looking for in the daily trigger? What are the rules, Bulls?
Election here. Read all the transcripts and see if anybody mentions.
Tell me in the chat what the rules are.
The pending election. It just isn't part of our thinking. It's not what we're hired to do. If we start down that road, I don't know how you stop. So.
Thank you, Chair Powell. Question about
That's right. We want a new high above the daily trigger. We want the hourly trigger to get above the daily trigger. We want to make a second new high.
Pandemic levels. One thing that hasn't normalized is wage growth, which is still quite a bit stronger than before the pandemic. I wonder if you can share your analysis of why that's happening. Is it a lagging indicator or something else going on?
So I think if you go back to where wages peaked, wage increases peaked couple, 3 years ago, essentially all wage measures have come down substantially to that. But they are not down to where they were before the pandemic. They're still roughly a percentage point higher. And we've seen pretty consistent progress, but not uniformly. And you'll note the ECI reading.
You mean they're offsetting inflation, Jerome?
It was expected to have come down, and essentially it was flat year over year, I think, roughly. So, yeah, I mean, that part of it is bumpy. And again, we don't target wage increases, but in the longer run, if you have wage increases running higher than productivity would warrant, and then there will be inflationary pressures.
So you need to create more jobs, then, right, Jerome?
We've seen progress. It has been inconsistent, but we have seen a substantial decline overall. But we have ways to go on that.
Scott. You were Nancy. Sorry.
Tell them, Jerome, that you need more people back to work to let off of the wage pressure, right?
You mentioned consumers, and consumers are feeling the weight of interest rates right now. Mortgage rates are up, as are rates for car loans, credit cards.
Get used to it.
To borrow are very discouraged. That's reflected in their views on the economy. What would you say to them?
Well, the thing that hurts everybody, and particularly people in the lower income brackets, is inflation. If you're a person who's living paycheck to paycheck, and suddenly all the things you buy, the fundamentals of life go up in price, you are in trouble right away. And so with those people in mind in particular, what we're doing is we're using our tools to bring down inflation. It will take some time, but we will succeed, and we will bring inflation back down to 2%.
Hell yeah.
And people won't have to worry about it again. That's what we're doing, and we know that it's painful and inconvenient, but the dividends will be paid will be very large, and everyone will share in those dividends. And we've made quite a lot of progress, if you can think about it. I think headline core PCE peaked at 5.8. Now it's at, anyway, headline peaked at 7.1. Now it's at 2.7. Don't want to get that wrong.
No, you don't. Quick follow-up. Are current interest rates really doing that much, though, to fight inflation right now for those consumers?
Yes. I mean, I think that restrictive monetary policy is doing what it's supposed to do, but it's also, in this case, unusually working alongside and with the healing of the supply side. That was different this time was that a big part of the source of the inflation, and the reason why we're having this conversation, is that we had this supply side kind of collapse with shortages and bottlenecks and all that kind of thing. And so
just tell her it's too early, Jerome. Don't get into it with her.
Reopening of the economy.
She's a bear.
Other things that really raised demand.
She wants to see a fucking crash, bro. Tell her no. Sorry, you gotta wait.
The reversal of the.
We're gonna pump the economy a little bit.
From the pandemic and the response to it, along with restrictive monetary policy, those two things are working to bring down inflation, and we've made a lot of progress. Let's remember how far we've come. And we have a ways to go. We've got work left to do, but we're not looking at the very high inflation rates that we were seeing 2 years ago.
Get above the daily trigger.
Courtney Brown from Axios. Thanks for taking our questions, Chair Powell. I wanted to follow up on something.
Break above right now. Break above, baby. Get up there.
Inflation. There's kind of been this long-awaited disinflation and shelter that still hasn't arrived. So I guess two questions. How do you explain the substantial lags between some of the private sector data we're seeing and the government?
Whoa.
And how confident that rents will be helpful on the inflation front in the coming months?
So essentially, there are a number of places in the economy where there are just lag structures built into the inflation process, and housing is one of them. So when you have when someone goes to a new person, that's called market. Been very low.
Oh boy!
They were incredible.
Oh, the tables turn in one day.
So what happens?
Oh, the tables turn in one day. Oh, the tables turn in one day.
rents for tenants who are rolling over. Landlords don't tend to charge as much of an increase to a rollover tenant for whatever reason. And what that does is it builds sort of an unrealized portion of increases when there have been big increases. And
hey, Jimmy, what did we say, Jimmy?
But the story is it just takes some time for that.
What do we say, Jimmy? What do we want to see, baby?
That as long as market rents remain low.
5-10 what?
In measured inflation, assuming that market rents do remain low. What will be the exact timing of it? I think we've learned that the lags are longer. We now think significantly longer than we thought at the beginning. And so confident that it will come, but not so confident.
Jimmy Barry, what did we say we wanted to see, my man?
That this will happen.
Thanks.
Nick Jasinski.
Thank you, Chair Powell, for taking the questions. This is Nicholas Jasinski from Barron's Magazine. It seems that over the past 3 or 4 years, economies and central banks in developed markets at least have been on more or less the same.
Who wants the market brief for tomorrow?
Pandemic, fighting inflation.
You got it, Jimmy Barry.
Feels like that may be ending in 2024 based on some of the economic data from Europe and the US and Japan and statements from those central banks as well. So my question is, what considerations or risks does a period of more
5 minutes about to cross the half an hour right now.
Central bank policies present for the FOMC?
So that you're right. I think that may happen, and you know that we all serve domestic mandates, right? So I think the difference between the United States and other countries,
505 C's
rate cuts, is that they're just
we're trading 39 cents for today. What are they printing right now?
About like ours, or maybe a little better.
What are they printing right now?
Kind of growth we're experiencing. So we actually have the luxury of having strong growth and a strong labor.
What are they printing right now?
Creation and all of that, and we can be patient, and we'll be careful and cautious.
They were 250 a minute ago. Now they're 226. They're like, we're going to take all that money away from you.
Jurisdictions make.
Be careful of the pullback down to the cross of the 5 minute.
Obviously, markets see it coming. It's priced in now, and so I think the markets and economies can adapt to it.
I didn't see the 280. I saw 253.
In addition, for the emerging market economies, we haven't seen the kind of turmoil that was more frequent 20 years ago, 30 years ago. And that's, I think, partly because emerging market countries, many of them have much better monetary policy frameworks, much more credibility on inflation. And so they're navigating this pretty well this time.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberg.
Johnny on the spot saying, fuck you, Cap.
Away from the notion that the economy
we're going that way.
Counter pain for inflation to come back down. But given sticky inflation data in the first quarter, can disinflation still happen along relatively painless?
When the 5 minute trigger crosses the hourly, it should lead to an explosive move to the upside.
Likely needed to bring inflation back down.
So you're right. I think we thought
the 5 minute bump,
there would have to be probably a significant dislocations somewhere in the economy, perhaps the labor market, to get inflation all the way down from the very high level.
Maybe I should post on Twitter the market brief from Monday night and then the market brief from Tuesday night for Wednesday. We should see what the path was.
Unwinding of things that weren't to do with monetary policy, but the unwinding of the distortions to the economy, supply problems.
The before,
also some
and the after. The before and the after.
Down. Now, as I've said, I'm not giving up on that. So I think it is possible that those forces will still work to help us bring inflation down. We can't be guaranteed that that's true, though. And so we're trying to use our tools in a way that keeps the labor market strong and the economy strong, but also helps bring inflation back down to 2% sustainably.
What do you think of that, Binky?
Sustainably, we hope we can do it without significant dislocation.
I'd call that 2 for 2, wouldn't you?
And speaking of dislocations in the labor market, in terms of cutting, you said if
I call that 3 for 3 with Sundays, right? Sundays, Mondays, and Tuesdays, all correct.
4%, but inflation not back down to your 2% target, how would you look at that? Would the unemployment rate popping back above 4%?
They don't like that, Binky. Make some rage, brother.
Weakening is the way I characterize it. So, and I'm not going to try to define
Top buyers, bottom sellers. Top buyers, bottom sellers.
and get our attention and lead us to think that the labor market was really significantly weakening for us to want to react to it. A couple of tenths in the unemployment rate would probably not do that, but it would be a broader thing that would suggest that it would be appropriate to consider cutting. And I think whether you decide to cut will depend on all the facts and circumstances, not just that one.
I think I need a beer. I'll be right back. Should I be right back here? Hold on a second here.
Chair Powell, thanks for taking the question. Kyle Campbell with American Banker.
We're going to play some jams at the end of today, too.
Real changes are needed for the Basel III endgame proposal, and you've mentioned that a reproposal
It's free.
It's on the table.
What we do here has always been free. It'll never change.
Process that.
We've expanded some of what we do where people have asked for more.
Of whether a reproposal.
So for $32 a month, if you want more, you get access to more. A ton more.
Some sort of movement will be made.
And the people that do support what we do here know every move the day before at minimum. Pro traders know it weeks and months before.
Completing this process and carrying out Basel.
I love all of you out there. I love every fucking last one of you guys.
To what the other large comparable jurisdictions.
You're a part of our community. I fucking love you.
We haven't made any decisions.
Dodge and weave, baby. Dodge and weave.
At all. Nothing.
Another week of dodging and weaving.
No. If we conclude that.
Another week of dodging and weaving.
To insist on that.
And then do you need to
I fucking love all of you out there.
Issues with the capital proposal in order to advance other parts of the regulatory agenda, or do you expect to continue to make progress on those other agenda items?
There's no mechanical rule in place there, but I would say that the Basel III,
I love you too, Axel Gamer.
Important thing, and really
make sure you're getting access to the market brief, get the Discord, get access to the velocity and triggers, get access to the E-dubs we do, coupled with gamma and triggers and velocity together in multi-time frames. If you're a futures Globex trader, get your ass in our Discord. I'll put our traders and our mentors up against anyone out there.
Which you recently identified as a priority, while allowing for a range of views or even dissent. We don't.
Oh yeah, baby, the chicken delight.
Even when more spirited.
Chicken delight, baby.
In the minutes after the fact, how do you avoid groupthink and avoid a higher risk of a policy?
Oh man.
So I think if you listen to, and you all do, listen to my 18 colleagues on the FOMC, you'll see that we do not lack for a diversity of voices and perspectives. We really don't. And it's one of the great aspects of the Federal Reserve System. We have 12 reserve banks around the country where they have their own economic staff, not the people who work here at the board. They're different people, and so each reserve bank has its own culture around monetary policy and its own approach and that kind of thing. It guarantees you a diversity of perspectives. So I think that the perspectives are very diverse. But and in terms of dissents, we have dissents, and a thoughtful dissent is a good thing. If someone really makes you think, that kind of thing. But all I can say from my standpoint is I listen carefully to people. I try to incorporate their thinking, or do everything I can to incorporate their thinking into what we're doing. And I think many people, if they feel that's happening, that for most people, most of the time, that'll be enough. But I'm not. It's not frowned upon or illegal or against the rules or anything like that. It just is the way things come out. And I think we have a very diverse group around the people, frankly, more diverse than it used to be in many dimensions, more diverse from the obvious, gender and demographic ways. But also we have more people who are not PhD economists. So we have people from business and
that's me,
law and academia, things like that. So I think you actually do have quite a good diverse perspective.
We got people that didn't go to grade school.
Stories about a lack of diversity, and we look around the room and say, I don't understand. I really don't understand what they're talking about. So, but I get the question though.
We listening to a dumbass on streams. Just kidding. We get dumb retail traders. If you are in the Discord, I am making a post to you right now for what to expect into tomorrow. So if you are looking for what to expect from this point forward, I am making a post for you right now in the Discord right now for what to expect into tomorrow. Typing it right now here. What to expect into tomorrow. Oh yeah, I just got some love. I just got some love here. I just got some love, baby. I just got some love. 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 How about this? We're going to talk about something here, okay? You know what? We'll do it for everybody. How about that? How about that? We're going to do it for everybody. Let's do a little expectations. You want to do that? You want to do some expectations for tomorrow? Let's do some expectations for tomorrow, okay? We'll do it as a team. Because we do this shit for free, don't we? Hold on here. Give me a second here. My shit's on my fucking tasty. Let's take a look down here and see what we got going on down here. Whoa, what's that down there? Oh, they're stinky down there, aren't they? Stinky pants. Give me one quick second here, boys and girls. Stay with me. Please stay with me. All right, 1 hour. Oh, yeah. Okay, so this is going to be tentative. Tentative. Listen to me closely. Tentative. Listen to me closely, please. I'm going to give you an alternate and an expected count. Expected count here for tomorrow. Pay attention. Oh, that's wrong. Hold on a second here. That's better. That's better. Hold on here. I got it wrong here. Hold on a second here. Oh, I got to draw this again. Hold on a second here. Up, get down into Friday for that volatility, and then Monday come back up, right? Something like that right there. This is the expected count for me. Thursday. Something like that right there. This is Friday. Friday? Right there. This is Thursday, 2 p.m. Now, don't pay too much attention to right now, because if we push this up, it's going to fail anyways. So remember, this is a 1 hour time frame, so don't be paying too much attention to the next 15 minutes, the bell, or any of that shit. Be paying attention to a roll down in the overnight, but then an attempt at an all-time high. Not an all-time high, sorry. Just noting this. And then volatility into Friday at 8 a.m. for the economic news. That says 494 right there, right? Pretty bad, right? And then an attempt much higher. And that attempt higher should go right there. Wait a minute. Right here into Monday, okay? That's Monday over there. That's Monday, Tuesday, Wednesday, Thursday, somewhere in there, just like that. Something like that, okay? That's my expectations. Now, swoop up, come up there, push it back down, slam it down, right, for the volatility on Friday. Saying all of this right here, this is the expectation. Now, that Jerome Powell presser was big, unexpected, because the focus is going to be on inflation. Jerome tried to talk that shit down today. So I'm going to give you an alternate count due to what Jerome said today. That's the expected. That's the expected right there. You're going to get more, okay? Now, the alternate count here would be that we blow that shit off and we go higher. They cranked that close up there. I don't know that we get this down here, but it's possible. It's possible. This is Thursday, right? 1600 into Friday. What is this? Hold on, I gotta see what this is. So we come down, go up into Thursday night, or Thursday in the afternoon, right? They get panicky for Friday. No, that's not the alternate count. That's wrong. Yeah, that's the only count I've got for you until tonight. That's my expectations right now. That's my expectations. Pullback, right? We close the day. You wake up in the morning, they ramp this shit back up again. And they panic sell into Friday. Panic sell into Friday for the report. Doom and gloom, you come back on Monday, we ramp it again. That's my current expectation. Alternates, you said red on the day today. That shit ain't happening. Sorry, suck a ball. You ain't getting a red day today. Eat my balls. That's not happening. Fuck off with that. At worst, you're gonna close at 5:03. This hourly velocity is going to fuck you up if you're a bear. I promise you, this is gonna fuck you up. Now, let's say we fail the hourly trigger. So here's the close right here. Here's the close right here, right? Your alternate count that I guess would be tomorrow. We blood this down to right here. We come up right here and down right here. That's your alternate count right there. That's the expectations for now into Monday. If anything changes overnight, you'll know that you're going to get a brief from me tonight anyways. Now, saying all of this that I am right now, and that's basically your count, I believe. Yeah, that would be lower. It'd be over here. Be over there. Now, saying all of that, right, we have more down to go into Friday. Saying all of this, I want to say something to you that's important, okay? Very important. You got this, right? Down there, up, down. Relief rally into next week. Monday, we start relief rallying. We're going to go high, way high, way high. We're going to like way, 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 way high. Now, I want to say something that's important. Number one, Jerome Powell's going to get digested. You're going to get some bears out there trying to tell you a bunch of shit. And they're going to try to take control of that narrative for you between now and then. And we do want to wait for how it's digested and the reaction to it. Now, saying that, this is important. We follow price always. And we're going to go down to a smaller time frame. I'm going to delete this. You want to take a snapshot of that? You can. You can if you want to. And that's actually going to be a higher high, I think. But I want to show you something that's very important. I want to impress something upon you. I want to talk to you about velocity here, okay? This is the thing about velocity here. They will ram this up your fucking throat. And this is why you hang out with me. This is why you hang out with me. I can make any prediction you want, but I can show you something here real quick. How fast a bear can get fucked. And a bull. But I want to show you how fast you can get fucking wrecked here. We can come down here, test this shit, come right up here, boom, and get right there like it's nobody's business. Like nobody's business. Nobody's business. 1, 2, yeah, 1, 2, and 3. Fuck yeah. Here's an alternate count right here for you for bulls. No problem. No problem. So what does that mean to you if you're a bear? If you've got that bear count going on, I'm going to tell you something. I'm going to tell you something important. if you got that bear count going on. And this is the bull count right here. I'm going to warn you of something if you're a fucking bear. You see that hourly trigger right now is at 503.48. If you cannot begin to reject that and get a new low right here, if you cannot reject the hourly trigger, catch a new low, like that, that Friday low can kiss my ass. And I'm saying that because none of this was expected today. Jerome today was not expected to say any of this stuff. So I think this is gone. You got to remember that they were looking for some real bearish shit today. Like, I mean, real fucking bearish. That presser was the best presser that a bull could hope for. So just be like, I'd be focused specifically on that hourly trigger. If you're a bull, I'm going to delete all this again. If you're a bull, I don't give a fuck about Elliott Wave. I'm going to tell you something. This is where Elliott Wavers get smoked. You can't use Elliott Wave alone. Can't use Gamma alone. You need, for me and for our group, what we need to use combined is, you ready? Multi-time frames, daily, hourly, or 4 hour, 1 hour, half an hour, 5 minute, 1 minute. Right? We count the clock here, 9:30 to 10:30 to 11:30. That's the hour, not the top of the hour. It's the half hour. Starts and ends an hour, right? All the way to 4:30 in the afternoon. So we have multi-time frames. We have Gamma. We have Elliott Wave. And then we have Velocity, Momo. And I'm going to tell you something. The one thing that fucks everybody is Momo. Not Gamma, not multi-time frames, not Elliott Wave, not traditional charting, Momo. And I talk about it on social media all the time because it destroys everything. It's like a shark swimming up from underneath, and it's like a shark swimming down from above. And you'll be thinking everything is fine, and these sharks come up from the bottom, and they rip your fucking face off. Now, right now, on a half an hour basis, Momo is becoming bullish. It's coming neutral, actually. But I'm going to show you something that happens. You're all out there on public on social media, and if this shit happens right here, they rip your fucking face off. They literally rip your fucking face off. So I'm going to give you a stern warning here. We can go back down and get the Momo back down here. But I'm going to warn you, if that fucking hourly trigger holds, right, and we start cranking up this way, you're going to have a bad time. You're going to have a bad time. So if you're a bear, please, you must reject below 502.35. Not good enough coming down here. That's not good enough. You need to get underneath it and begin to reject and get yourself a new low over here. Do you understand? You got to understand that, because they're going to rip your face off to the upside on a back check on the hourly trigger. Rip your face off. Pay close attention to these numbers right here. 502.35. And I want you to see this right now. These buyers are going to step in here to buy. So you need to overrun the buyers and get underneath them. If you can't, I warn you, they will fucking give you a bad day. And all that shit you use out there is going to be wrong. So pay close attention here. 502.35, 503.48. And they're stepping in once again. These are the same buyers that were right here. And they're going to hammer you again right here. They're right here. I can show you. They're right here. This is where the sharks are. They're coming up from down below. Now, that's an ugly-ass shark, isn't it? And they're going to try to eat your ass right here. And if they do eat your ass, you're going to get the alternate bull count, and they're going to fuck you up. You're going to cancel out all that bullshit. And they're doing it right now. You can see them. They're coming in right now. They're stepping in right now. Now let's look at a 1 hour. On a 1 hour time frame, this is where the bulls started, right? Right down here, right? On a 1 hour basis. So that's why I tell you need the new low down here, right? Because they're right here waiting for you here, too. On a 4 hour basis. Same spot, 500. They're fighting right now. Look at them. There's more buyers here than sellers. You see them? Now that you're on a 4 hour basis, you see them, right? Watch them. They're right there. Here's the high tick. Here's where the buyers stepped in right here. So that 500 is a key level, isn't it? For your doom and your gloom. And 4 hours is super trend. You want a big old down move? 4 hour basis, baby. So let's watch this into the close right now. Let's get back to a 30-minute. Let's get back to a 1 minute. Let's see what happens right here. Let's see what happens. Let's see if these buyers are real or if they've left and gone below again. We'll stick around for this. We got some reports after the close, don't we? 3:43. I just said it to you. I just said 4 hours. I just said 4 hours, 1 hour, 1 hour, half an hour, right? They're short, baby. They're upside down. They're upside down right now. They're fucking pissed. This is where your buyers are right here. Now we're on a 1 minute trigger. Where are your buyers? Here and on the green right there. On your hourly trigger. If you don't know what an hourly trigger is, you're going to find out really quick. The hourly trigger gives you a bad day. That's why we went to the daily trigger. Your hourly trigger is going to fuck you up. This is a back test of the hourly trigger. What do bulls need on a back test of the hourly trigger? Do you know? They have to get right there. What do bears want on this back test of the hourly trigger? Do you know? What do bears want on the back test of the hourly trigger? Bears want a failure, right? And they want a new low right there, don't they? See it? Yeah, I think that's the low. Nope, that's not the low. That's the low right there. $4.99.48. Where do you think we're going? I think we go up. I think you're wrong. I think we're going up. I think we're going up. Matter of fact, I'm going to probably buy some calls here for tomorrow morning for right there. 346 right now. This is the bear trade right there. Maybe I should make that bigger so you can see it. That's the bear trade. I'll draw this one better. And that's the bull trade right there. Let's see who wins this. You guys want me to draw this better? I could draw the bear trade better if you wanted. Right there. I think that works better. I think that looks pretty clean. Don't get mad at me with my drawings, by the way. Don't get mad at my drawings here. If you want to know when I buy calls, we'll buy calls right there. Have them set up right now, so buy calls right there. You want to see the Bears lose and then ramp it into the bell. Right about there. Let's see if the buyers are still here or not. It's going down. No, it's not. You need a rejection and a cross of the 1 in 5 minute trigger and a break below this. Not yet, it isn't. I need to see. You would lose that trade 7 out of 10 times saying that. 7 out of 10 times you'd lose that trade right where we are. Now, you're a losing trader. I'll tell you right now, I know you are. I can prove it. I can mathematically prove it. You need this cross right here. You need like bulls failing to buy right here. And then the reversal for the new low, but you don't have it yet, so you got to wait. Sorry. Yeah, you need the confirmation. You need the buyer weakness here. You're just calling shit out of the air. You're just like, it's going down. That's as bad as me saying I'm buying calls right here. It's the same thing. Bear rage, baby. Bear rage. Shorts upside down right now. Bear rage. But that's the reason why I said it. Yeah, you need some proof here. So we'll watch for it. This is bad for bulls here. That's a bad candle for bulls. Now you're going to usually test this reaction right here, and there's your bear plane right there. Seal the deal on the bulls right there. But wait a minute. Seal the deal on bulls right there. There's your target right there. So the best part of this trade that makes money is that part of the trade. This one makes the money. This is the money maker. That's like an 85% of the time printer. 85% of the time printer. This right here is like 65%, and this one right here is 85%. So you can see it. 3:55. 5 minutes left. 5 minutes left. $0.60. Three minutes left. They got 3 minutes. 3 minutes to get that low. I just added 505C at the bell here. No new low for bears. No new low. No new low for bears into the bell. 1 minute left. Please, Jesus, don't do it to me in the after hours. Please don't do it in the after hours. Don't get the new low into the bell. No, don't fucking do me like that. Oh, Jesus Christ, save my ass. Woo. I just bought 505Cs for tomorrow. I'm scared shitless. No new low for bears. No new low for bears. Scared shitless there. Woo, I was scared. Let's see what happens between now and 4:15. Yesterday we got taken to the cleaners in the after hours. I got 505s for tomorrow. Oh, dude, I was scared shitless there. Let's see what happens right here, right now. They didn't get it, so I'm pretty confident here we're good. This is like the bulls not getting a new high in the upside. I got 15 more minutes to find out if they're going to sell this bullshit. Let's take a look right now and see if they try to do it. Don't fucking sell me down right now. It's not good enough that you break the hourly trigger. You got to reject that shit, Broseph. Sorry. And you didn't get the new low and you didn't reject it. So fuck off. You needed that new low and you didn't get it. Oh my God, that's sweating bullets. Woo! Scared shitless there. Oh, dude, give me more money, dude. Don't be fucking with me. Give me more money right now. Don't be fucking around. Now send it up to 505 for me by open tomorrow. That was a good trade. I'm feeling good. QCOM is mooning right now. I'm looking for. What do we got over here? We've got reporting right now after the bell. We've got oh, dude, this is a shitty this is a really shitty. That's a really trashy look. They ain't doing it for me. Hold on a second here. None of that shit none of the reports are on the right time frame. There we go. Much better. Oh, no, that's the one. That one's wrong too. That ain't right. Oh, there we go. So much cleaner. Oh. After the close today, we have Qualcomm, Devon, Paycom, Carvana, Fastly, Etsy. Let's see what Etsy's doing. Is Etsy actually doing it after the bell or no? Let's see what Etsy, this is Etsy, by the way, right now. Trading $69.50. Yeah, they're looking kind of bullish. Yeah, we're cranking right now. We're cranking right now. We're good. We're cranking. We're cranking right now. We're doing really good. If you want to hold until 4:15 those calls, you might make just bank without any risk in the overnight. No new low for bears on that doom sell into the bell there. Nothing on Etsy right now. Fastly. Oh, hold on here. FSLY. Fastly cranking right now. Oops. Back down for This is Fastly. Uh-oh. Fastly got told fuck off. They did close the gap, though. They did close the gap up here. Yeah, that looks like that looks like a fucking trader that was trapped. I'm going to assume they had a good report and that they took the money and ran. We've got Etsy reporting today, Fastly reporting today, but then tomorrow in the morning we've got Peloton, Nova Nordisk, Moderna, Cigna, Wayfair, and then we get the big boy Apple after the bell. Fastly getting wrecked right now down to $12, $12.05 just then, $11.95 right now after the bell. They must have missed because they're really low right now, really low. Fastly getting taken to the cleaners right now, trade $11.75. They're below any low since, new low for Fastly, trading $11.82 with a low of $11.65. If you like Fastly, no, it's been a while. Well, they can go way lower. Fastly can go $7. $7 on Fastly, easy. Traded at that moment, 1165. Stay up there, Spoos. Don't be coming down on me, Spoos. Trading 53 cents now on 505Cs for tomorrow. Let's look at Apple really quick, because they got a report tomorrow as well. Oh, yeah, dude. Oh, yeah. We're good. We're really good. Apple on a low today, 169. Same spot for demand as before. Here, here, and here. Dude, they just don't like Apple, do they? They just do not like Apple. Apple with a low today of 169. Woof. I got a warning for you here in Apple, though. A warning on Apple. Let's take a look at Apple really quick. I should have looked at this earlier. Apple, vicious. Selling on Apple, vicious. Apple has a... So I'm going to show you something about Apple here. Apple, underneath its daily trigger, has an 1, 2, 3, 4, 5 cluster above it. This could get really dangerous for Apple. If Apple comes back with an inline or a failing report tomorrow after the bell, that shit's going to the depths of hell. A lot of danger here. Excuse me, on Apple. Let's look at velocity on it really quick. I don't know, man. I got to look at it in a higher frame. It's being, this is bad right here. You see that right there? That's bad. That's bad. That's like skull and crossbones shit for Apple. I got to be honest. That does not look good. No, that does not look good. This looks good over here, but this looks good over here. Check mark. But over time, this is bad. Bad for Apple. Really bad. Like Apple's crash. I might have to buy some puts on Apple tomorrow night. I'll tell you what, if Apple comes out with a bad report tomorrow, I think we go up tomorrow, but if Apple gets underneath here, you're fucking going like way lower. Price target on Apple, $120. If they have a bad, if they don't come out swinging, yeah, you're not going down just yet. You're not going down just yet. But I'll tell you what. Oof. If Apple has a bad report because they've got quarterly and monthly velo that looks like dog shit, they will trade all this stuff. What's Apple expected to print? I gotta check this one tomorrow. Yeah, that fucking, you'll take all that shit out. You'll take this whole move out for Apple. Take that whole fucking move. No more bonds for you, buddy. Apple's bond party is over. 120 price tag on Apple if they get a bad report. It would be something like that right there, that right there. Not really drawing that too nice. You'd tag that one right there. Then you'd come up here and tag that one over there. It's going to take some time, though. It wouldn't be just all at once. It'd be something vicious like that. Bam underneath. Bam underneath. Bam. This is over time. This has got to be like, this is some Tesla shit right here. That's some Tesla shit right there. Vicious. But you get a good report, and they're going to escape and go up. This is a really good trade tomorrow for the close. 190 calls, 160 puts. 190, 160 puts. 190, 160 on Apple. This is really good. I'm going to have to take that trade tomorrow. RGF. I own them. I own RGF. Oh, wait a minute. Oh, shit. Hold on a second. I got to make a phone call. Oh, fuck. Oh, fuck. Hold on one second. Give me a quick second here. I own a fuck ton of RGF. Is there any news breaking? New CFO is what I'm being told. RGF cranking right now. I even got the little red line right there. Oh, yeah. Oh, yeah. News of a new CFO. I don't know if that's real or not. Extended a loan too? Yeah, I own this ticker. I've been buying this fucker for a long time. I bought all this in here. I bought this. I bought 36 cents down here. I think this is my last buy down here. 33 cents was my last buy. I didn't start buying this until right here. I started buying it right here. I think about 1,000 of these. Then I bought like 46 cents or some 42 cents. Right in here I bought these. And then I bought 33 cents. I fucking own I own thousands of these things. I don't tell you guys about some of my trades because it's too dangerous. I don't want to get in trouble for stock pumping. I don't want to get in trouble. Like anything with a low float, don't touch it on stream or in the chat or anything. I don't talk about low float shit with you guys. That's how you go to prison. Yeah, we're good right now. Bears needed this right here. Bears needed 499.33. They didn't get it. I'm feeling pretty good here right now. We're at 415. Feeling pretty confident here. I've got some 505s for tomorrow. We need to look at Apple though tomorrow. Remind me in the morning. We need to look at Apple because someone wants a fucking low on. Well, not someone. On their daily velocity at home, take a look at their monthly and quarterly velocity. That shit is dangerous. Super dangerous. It shows divestment. Let me explain something to you guys into the bell here. If you ever on a ticker, I want to show you guys something here, okay? I'm going to show you guys, we're going to do a little training session. I want to warn you guys of something, okay? This is the S&P 500 right here. I want to show you guys something here, okay? If you ever I want you to see this right here. Now, we did peak up here. But if you ever see like quarterly, monthly, and weekly all lining up, forget the daily. If you ever see like this stuff peaking out and then coming down, peaking out and coming down, and we're starting to make highs up here on SPY or any ticker, and you begin to see like us coming down on quarterly and monthly velocity. Listen closely. Quarterly and monthly velocity peaking as prices peaking, and you start to see quarterly and monthly velocity divesting. It's even scarier on a half-hour basis. You look at these on a half-hour basis, you can actually see these going down before while price is going up. It's a crash predictor on a stock. It's a crash predictor on a stock. So we'll talk about this more. We're not there yet in SPY. We're not there right now in SPY. But when we get there, you're going to see me talk about it. You'll see me discuss it. Right now, for SPY, right now on a higher basis, we're trying to trade like 520, 530, 550, and we're due for a major correction down here. I don't know if you know that, but that's what we're looking for. So right now we're on a higher time frame. We're looking for. We already got the 520, so we're looking for 530. Come back down here, and for 550, and then we're looking for a major correction down here. I don't know if you know this, but major correction, and then we're looking for I believe 570. Don't quote me on this, but I think it's 570. And then 5,900. Somewhere in there. And I think this one comes down to, I think this is your election bid. Don't look at this time down here. I'm just drawing lines right now for you, but you're looking for this, something like this. You're looking for a bloodbath into the election. Forget this down here. Don't pay attention to this shit down here. But generally you're looking for 530, 550. And then you're looking for a major correction. And the election should prove that, but you're going to think that we're crashing, and we're not. We're going to go to 560 and 590, 6,000. Likely. That's the likely path. And then you should see velocity start to crank at the top on monthly and quarterly. We'll be looking for that into December and January. Maybe looking for this stuff over here. You're gonna be, you guys are gonna be looking for this up here and this up here, and then it's gonna roll hard and heavy, and the market's gonna fucking crater. You're lucky you got Nvidia in AI stocks. Meaningless without time frames. So I've predicted every crash we've had since I've been doing this, and every bottom to the date. So I don't know. Sorry. Stick around. I'll predict the next one for you too. To the date, to the tick. On record for it as well. I've got it on record. You can check my Twitter. I keep everything. I got videos of me calling for the top in 2022 on video here too. Yeah, sorry. Okay, so I will see you guys tomorrow at 9:30 in the morning. 9:30 in the morning. We still have a busy week ahead. As you guys know, we've got the vol curve ramping up into Friday because we've got big news coming out on Friday morning. And then we get a vol dump on Monday. Once that vol dump is done, I'm going to show you guys this one more time if you haven't seen it. So here, hang tight for just a minute. We'll look at it right now. Literally every single one. Nope, hold on. Let me do it again. Hold on a second here. I'll post this in the Discord for you right now before I get the brief done for tomorrow. Can I show you this? Let me move you guys over here a little bit. Oh yeah, I brag about it. I got no problems bragging about it either. Because I get it right. It matters. Okay, so over here, I want you to pay close attention here, please. This is very important. Okay, so I want you to see the dates here. Fuck me. I'm going to mute my camera here. Okay. Yeah, let's turn this shit off too. God damn it, dude. I got two of these things going. One of the stream is cracking apart. Okay, so I want you to see specifically. This is this one right here. I want you to take a look at. There we go. This is 5/3 Friday, okay? You've got we talked about how today I showed you a chart earlier where vol doesn't ramp and then it ramps up into Friday. We've got news on Friday that is considered to be volatility inducing on Friday morning. And so on Friday morning at 8:30 in the morning, we've got the U.S. unemployment report, the U.S. unemployment rate on the 3rd. We've got the hourly wages year over year. And then at 10 a.m., we've got ISM services. We've got Google'sby and John Williams. Whenever Powell comes out and he's hawkish or he is dovish, they usually come out and take the opposite side of whatever that argument is. So if we know that he came out hawkish today, but it's actually dovish for the market. So he was dovish in expectations for the market staying up. Okay. Remember, rate cuts are hawkish. It's the opposite of what you think. Rate cuts are actually hawkish. Rate pause is dovish. Rate hikes are on a smaller time frame hawkish, but they resolve to the upside as long as we haven't broken anything that forces a rate cut. So we've got this volatility that ramps up into Friday. I want you to see that 5/3, and then Monday it kills down to the downside. Now I want to draw your attention to unrealized volatility ahead, okay? So when we come into tomorrow, think about selling vol in a calendar spread, right? And then when we get down into, I want to say the 13th, but I think the 6th might be better. Now they're saying that I don't know, 6th, 7th, 8th. Here, hold on here. I don't know if you're buying vol on the 6th, but maybe. I'd be selling vol on Friday's close up here. So like you sell the vol on the calendar spread, you sell the vol here, and then you pick the vol back up on the buy side for a trade down the road on the 14th and 16th. You could have done it today, I guess. Shoot, I didn't check. But think about that trade. So the vol comes down. This is unrealized. And hopefully what you'll end up seeing is you'll see this chart change over time. See the vol come down into next week, and then all of a sudden you're going to get a ramp of vol. This chart will change. This will go away. And you're going to hear a narrative on FinTwit, on Bloomberg, and on CNBS that the PPI, but more importantly, CPI is going to matter. Now, PPI, thanks to VolWiz, he said, they're backwards this month. So you get PPI first. So don't be buying the vol for the PPI. Buy it for the 16th, which would mean, after the expiry should be after the 16th with enough, whatever time you want on that trade, so that you can realize a ramp and make money in the back end down here. Bring in a bunch of cash over here, right? Selling vol, and then ramp some cash to the upside. And the cool part about this trade is if there is no vol associated with that, let's say we don't catch the vol, let's say we don't catch the vol. Let's say we go down here, right? And you're selling the vol up here. It's paying for you to be wrong over here. Let's say it keeps going down. It doesn't actually ramp and it just keeps going down. This part of the trade is going to pay for this part of the trade not going up. But you're going to get monster money over here if we catch that volatility into the 16th of May. 16th of May, look for a big vol event. All right, that's all I got for you guys. Talk with you guys again. It's very key how you open and close that trade. It's very key. Like you want to be it's one trade, but it's two parts. So you want to be selling the vol, hold on to it for max money, right? To cover the trade for buying the vol in case we don't get the vol event. Now we think that it's underpriced right now, right? So I want to tell you guys something. The bears need a story here. They need something to grab onto, like a seller. Like even if you don't have volatility, you need it, right? You have to have some volatility in the market. So even though Jerome was talking today, remember we were in October, December, and we were like, they need something to grasp onto. And then in March 21st, 22nd, we said, we're going to get some range expansion now, right? Market's going to begin to expand. And you're going to hear specific storyline. Remember when I was posting to you guys the definition of range expansion and how it's geopolitical risk, how it's election uncertainty, how it's rate uncertainty, and that you would hear that become part of the conversation moving forward? And then we did, right? You started to hear that conversation be peddled on the news, peddled on FinTwit, Wall Street Bets, everywhere else. StockTwits, doesn't matter. So when you come into those range expansion environments, there are specific storylines that the news is going to push on you, narratives. So if we're going to move into a new narrative, looks like Israel and Palestine has some kind of a ending to that shit happening really soon. You're going to see the kids out there pumping their hands. The reality is that the U.S. intervention is required. They're building a fucking dock over there, and we are, believe it or not, keeping Israel from fucking murdering everybody in Palestine. Let's be honest. And fucking nuking Iran, right? So the U.S. is quelling that volatility. So there's going to be a new narrative. Listen to me closely here. You also have bond traders that are switching from the 10s and 30s to the 2s and 5s. So you're going to be looking for a different narrative for volatility as we move forward. And I want you to focus on this one. It's going to be important. That narrative is going to be wage growth spiral, right? Wage growth spiral and inflation. Whether you like that or not, you're going to hear that as the narrative. So whenever we come into these prints for employment, unemployment, when we come into these prints for wages and that kind of shit, jobs, that's going to be a narrative that's going to come front and center. And the bigger narrative is going to be inflation out of control at the same time. And they're going to try to spin shit on you like, oh, look, inflation's going higher and now you got a lower wage print, right? All those kind of, the interaction between those two things on top of inflation is going to be important. So they're not the narrative right now. They're not the narrative right now, but they're going to make them the narrative. So pay hyper attention to that as we get closer. And I remember the last narrative switch that we took. I was telling you what that narrative would be, and you guys were like, that ain't going to be the narrative, and it became the full narrative. So just be aware of it as time moves forward. And once we're done with that narrative, likely we're going to get into the election narrative. And the election narrative, like they've poked its head in here and there, but that narrative is going to be gnarly. That's probably the biggest vol ahead for us. And the worst part about that narrative, I'm going to tell you something that's not known, okay? Or not known, but I've told it sometimes to you guys, but they're going to push a narrative that the Senate is going to go either hard right or hard left. They're going to tell you, like, the presidency, all this other stupid shit. They're going to literally, I'm going to tell you the truth. They're going to roll out Art Cashin one morning on CNBC. And Art Cashin's going to tell you something. He's going to tell you, trust me, they're going to roll him out on CNBS one morning. He's going to be standing on the floor, and it's going to sound like there's a bunch of trading going on. And he's going to come right to you, and he's going to whisper in your ear, and he's going to say to you, the Senate might go all Democrat or all Republican, and the stock market doesn't like that. And it's really dangerous. And uncertainty in the presidency is really dangerous. And he's going to tell you that the stock market's going to crash due to it. And you're going to drink that shit, and you're going to eat it, and you're going to put it in a fucking plate, and you're going to cut it up, and you're going to fucking shovel it down your gullet. And it's going to get paraded and parroted everywhere. And that new narrative will come into play. And the market's going to get weak early into that narrative. Early, or late in the election season, but, and you're going to think that the market's going to crash as we head into the election. But what they're going to do is turn this market back up again on you. And you're going to be pulling your hair out going, I thought the market was going to, you told me the market was going to crash through the election. And then they're going to wheel Art Cashin out again on election day in the morning at 4 a.m. 4 a.m. on election day. CNBC is going to put Art Cashin on, and he's going to waddle out. He's a nice guy. I like Art Cashin, but they're going to say, he's going to come out and he's going to say to you this. He's going to say, the market's like gridlock in the Senate, right, and the presidency. And that's what we got, because that's what the U.S. does most of the time. Most of the time, the Senate is gridlocked. Most of the time, the presidency doesn't matter and is opposite of whatever that gridlock is. And the market's going to fucking rocket. And you're going to be fucking pulling your hair out going, what the fuck is this? So just look ahead to those two narratives. You got the first one for inflation, employment, wages, jobs. They're going to harp on all that shit, and then election down the road. Daily Candle isn't bearish for tomorrow. No, I'm not beared up here. I know there's volatility coming into Friday. We already know that. But I'm not too beared up here. Not personally. Man, if we just traded down on the close to 500. If we trade 494, I don't care. The moment that we get above the daily trigger with a new high, and or minute we get over here, I want to show you guys. I'm getting a lot of questions here from people that I'm thinking aren't here normally. So hold on, we're going to talk about something. I'll make this really simple for you, okay? If you're a bull, I'm going to make this super simple for you. Seems like there's people here in the chat that aren't normally here. So if you're a bull, okay? If you're a bull, I'm going to show you a very simple way to do this, okay? Super simple. You should never have to ask me this question ever again, okay? Ever again. Keep it really simple, okay? So on different time frames, you're bullish or bearish. Bullish, bearish, bullish, bearish. Like on a year, on a month, on a week, on a day, on a half a day, on an intraday, on a 5-minute basis. We can be bullish and bearish on a 5-second basis. 5-second chart, 1-second chart, 5-second chart, 30-second chart. I can tell you on every chart if I'm bearish or bullish. So let's look at if you are just an investor or a trader, when you should be bearish and bullish. Make it really simple for you. Super simple. This is the S&P 500, okay? Made it really simple for you, okay? Super simple. This is the daily trigger, right? This is yellow. Daily trigger. If you have price, here's price. Hold on. I'm doing this wrong. Price is above the hourly trigger. That's the green one. And the hourly trigger is above the daily trigger. Bulls are in relative safety. Sorry, I do this all the time for people. Now, if you're coming above, if price is getting above the daily trigger, you need a new high once you're above it. Okay, just pretend this came up. You need a new high. Once you do that once, you're in super relative safety for a long period of time. Talking like weeks, months, and whatever. This is also called being in a buy the dip environment. Buy the dip until it fails environment. Okay? Now, if price is below the daily trigger, sorry, and the hourly trigger is below the daily trigger, you are in what's called a sell the rip environment. Okay? On a like a day in, day out basis, like week in, week out, day in, day out. So that means that all dips are expected to be bought by the dip, and all rips are expected to be sold until something changes, right? So if you have the daily trigger right here, you would need to have price get underneath it, but that's still not good enough. Reject the daily trigger and make one new low. That's it. The hourly trigger would follow behind at that point at minimum. Sometimes the daily trigger follows behind and we go see the weekly trigger. That's pretty much what you need right there. The moment that happens, down, up, new low, you switch to sell the rip. Fairly simple, right? You sell every rip until we got back above into relative safety for the bulls. Yeah, you get a new high right there, and then we're off and running. Then you switch to buy the dip. Okay? Bulls safety, bear safety. So let's take a look at it right now over here. So I do these market briefs every night for people. and they ask me, is the correction over, Captain? Is it by the dip yet, Captain? We buy the dip here, Cap? And I say, no, we are not. Why? The hourly came up, the price came up, we're above the daily trigger, but why are we not? Because of the last part of that rule. So on Friday, right, and Monday, we knew we were rolling here on Friday. We knew earlier. I think we knew on Friday. That's when we knew. We had a failure of new highs, and we had this new low down here. That's bad too. Shouldn't have had that, and you should have had a new high right here. We knew we were rolling down before we ever got here. Before any of this happened, we knew that was happening. We have a reversal today, right? We have a reversal today, right? Let's talk about that reversal. We got a low in the last corrective move, right? Higher high. Check mark for the bulls. Failure on the daily trigger. Expected your first return to the daily trigger as well. And it did. It rejected. Came back down. Did they get a new low on this down move? No. That's positive for the bulls too, right? No new low. So where do we go? All the way back up again, right? All the way back up. Now they sold it again. The bulls did not get a new high today, did they? When we were in this stream earlier, what did I say in stream? I said we're looking for 510.51. Why are we looking for 510.51? Because it's a new high on this previous high over here. We didn't get it, did we? So what do they do to you when you don't get it? They sell you back down, right? To recheck this low. Now, did this low break today? Did this low break today? The answer is no. I'll tell you right now, it's no. The answer is no, it did not. I was watching this into the bell today very closely. That's a check mark for the fucking bulls again. But are the bulls out of the woods? No, we're still in a sell the rip environment. So you're not. You're still selling the rip here. Even though the bulls won this, you're still selling the rip. So are bulls out of the woods? No. But this is pretty constructive for the bulls, isn't it, at this point? Pretty constructive. What's some other shit we can delineate from this? Well, one, hourly trend is not blasting down violently, is it? It's actually starting to turn up. See it? Starting to turn up. Velocity is beginning to turn up at the moment. The violence of down is now starting to maybe turn around, right? No new low. That's good for the bulls. Now, what do bears need for more correction to here? Or bears, excuse me. They need to break that fucking low right there. If they don't need to break these, they just need to break that one right there. They break that one, we're going right down there. Okay? We're going right down there. 488, guaranteed. Fuck that 494 shit. We're going right down there. Guaranteed. 488, 486. Guaranteed. Fuck 494. I don't know. Andy Constant's saying 494. He's wrong. 488, likely. Or next week, it'll be, maybe it is 494. Hold on. If it was next week, I haven't spent the time to look at it yet. Too lazy. No, I'm just kidding. Price target be 490.67. 490.67. Oh, no, I got that wrong. Hold on here. Yeah, I kind of got that right. Yeah, 490. 490. That's the target. Okay, so anyways, forget all this bullshit for right now. This means nothing. To your question, are we bearish right now? We are in a sell the rip environment. But we have improving conditions for bulls. So we're kind of neutral here at the moment. Not quite bearish, not quite bullish. We have some recovery. We don't have a new low right here. So the bulls are still kind of alive. Still kind of alive. Now, if you're a bull, what are you looking for? See that nice green tick right there? I already know that we're kind of bullish right here, but what is a bull looking for price action to become buy the dip? What are they looking for? They're looking for price at any time. I don't care when. They're looking for price to get above, just above, but we'll take that one over there. So they're looking to get above here, right? Defend the daily trigger, right? And catch a new high. We'll go below it right there. Make this really simple here. Pretend this is price right here. Pretend this is the hourly trigger right here. Are you safe right there? No, you're not. No, you are right there. You're right. No, you're not safe. You would get this new high just above. Sorry, I want to make this pretty for you. So here's your new high right here, right? You get that new high right there. The moment you get that new high, the moment you'd be looking for a buy right there. This would indicate the regime change. This moment right here would indicate a regime change from buy the dip to sell the rip. That's all you need right there, that one new high. That's it. That's it. You're above the daily trigger at this point, right? You're turning up. The moment that you're here, you're in relative safety. Relative safety right here. You got the new high, or you got the high, then you got the new high. You have a successful back test on the hourly trigger, and you're left with what? Price, HT, DT. Question mark would be, how long does that last, right? You want to see how long it lasts? Long fucking time. Long time. Price breaks above, comes back down here. New high, new high. How long does it last? Oh, it can last months. Want to see another example of it? How about months over there? How about months and months and months and months and months and months over there? Make sense? It does not matter if this happens here or 5 months from now. Doesn't matter if it happens down below either. If the yellow line there, doesn't matter if it's next week, doesn't matter if it's 4 months from now. Does not matter. This yellow line will go up, it'll go down, but the moment you're above it with the hourly trigger, new high, it's all over. Correction overhead and higher. Another note here too that you can look at would be this. Has the daily trigger followed price to lows? Has the daily trigger followed price down yet? No. If you see the daily trigger stay above as we're correcting, what does it imply? It implies that this is corrective and not a crash. I'm going to show you examples of this right now. So you can predict how severe a correction is. You can predict, these are pullbacks. This is a correction. And if the daily trigger follows down, you'll get a major correction or a crash. I'm going to show you an easy example of this. Remember what I said to you, right? So like, hey, Cap, you can't predict shit. You're a fucking liar, Captain. No, I'm not. Follow the yellow line. Did it ever cross the orange line? No. That means we're having corrections, right? Corrections, right? Corrections, right? Corrections, right? Pretty similar, right? Price on the weekly trigger, no yellow. What happened over here? You got a cross of the weekly and the daily trigger, right? The yellow crossed, right? What would I tell you if I saw that? What would I tell you? We're getting something worse, aren't we? Right? This is the bear market, 2022. That's big right there, isn't it? Watch that. Yellow crossing orange. That's big, right? What is that predicting for you? Tell me in the chat. That's not a pullback. That's not a correction. That's a fucking market's rolling over. Market's rolling over. If this yellow line begins to cross right here in this orange line, what would I tell you on public? What would I tell you right there? I would say to the market has a risk of a major correction to a market crash. It's rolling over. See that? Here's another cool thing. Price can go all the way down to the monthly and still not have the daily trigger cross with it. Still. Here's a nasty one. Look at this one. Bloodbath, right? Woof. But the daily trigger didn't cross, did it? Immediately bought back up. Immediately, wham, to the moon. So it's very important for you to be watching for these crosses on higher frames. And this is only one of like 3 ways to predict a market roll crash. This kind of stuff right here with the daily trigger and the weekly trigger. So let's say tomorrow you woke up, right? And World War III, not World War III, let's say, I don't know, I don't fucking know. Terrorist attack happens. And we blast straight down there, but the daily trigger doesn't follow. What would my call to you be? My call to you would be, buy all of it. This is going to come straight back up. And I mean violently straight back up. And that's right. You can actually predict and see in advance with quarterly and monthly velocity if it's topped and began to roll down. And you can also predict using daily triggers crossing weekly triggers in that price action. But you notice how price action sometimes drops, but the daily trigger does not follow. So as price is dropping, you want to know, like, hey, are we going to crash? You guys are on fucking social media. How many people out there predict crashes? They do it all day long. They predict crashes, corrections, fucking all kinds of stupid shit. Bear markets. But you can't predict that shit unless you have confirmation. So until you see that stuff happening, like if I started seeing the daily trigger start running down towards the weekly, I would come to you and say, dude, we are going into a crash, watch the fuck out mode. And that would be valid until it improved, right? So let's say really quickly, I know you guys want to go. One last thing. Let's say daily trigger is running down, right? And you should be able to tell me this too, right? If you have access to this stuff, you guys should be able to come right to me and be like, hey, Cap, we're dangerously going. Hey, Cap, the daily trigger's down here. Are you scared of a crash, Cap? And I would say, fuck yeah, we're going to tell everybody. And what else would you tell people? Until conditions improve, we're at risk of a crash, right? And they're going to say, well, how are you going to know if conditions improve? Fairly fucking simple, right? Fairly fucking simple. If this does not cross and turns back up, the crash prediction or even crash warning alleviates, doesn't it? See the orange go this way and then price sneaks right through here. Whoop. You can actually tell when the crash danger alleviates. So you can like sit there and be like, hey, look, daily trigger's following price down right now. Oh my God, it's about to cross. Be scared of a market rollover or a major correction coming. And they're going to say, are you sure? And you're going to say, fuck yeah, until that shit improves, yes. Now let's say it improves. You can come back and say, it's alleviated. The daily trigger's now going higher. We don't have to be as scared right now, or as, you can take your crash puts off and that kind of shit. Anyways, stick around, hang out, spend some time, spend like a week, 2, 3, 4 weeks with us. Ask people about the market briefs. We're fairly consistent. We get them right about 90% of the time. So, and we do them every single night for you. And we've got Elliott Wave. People do Elliott Wave for us. We got pro traders out there in case something goes wrong. So. The best part about this system, I want to tell you guys the best part about the system is, or two best parts about the system. Two best parts. Number one, it dumbs down trading for you. Everyone tries to complicate shit, and you don't want that. You're a retail trader. If you were a fucking professional, you'd be working at fucking Citibank or fucking Schwab or you'd be working for a pro. 90% of traders lose. You guys overcomplicate so much shit out there. And it blows my mind that you still want to do that when you can just simplify your life with some simple rules. Just simple rules. You can literally turn off the fucking news and just trade the rules, literally. In 9 out of 10 examples, 7 out of 10 examples, that's enough for you to be rich. It's enough for you to be rich. And here's the second part of it. How many times do you have people say that's bottom, or that's the top, or we're going to crash? It's like nonstop. Why do they do that? They're either not trading with real money, or they're selling you something, or they just want internet points. That's it. Because they're either going to be fucking broke, I'm serious, or they want to be a reporter, or they're selling you a subscription or something like that. There's some ulterior motive. Because they're wrong all the time. We see it. I find it fucking hilarious. And normally, sometimes they get it right. When they do, it's because we've confirmed it here. We're like, hey, that's right. We are at a correction. That's not a pullback. That's correction. But that guy that's calling it has called it 5 fucking times or 10 fucking times before. So you assign that with that person the one time they're right, and you forget about the other 9 times they were wrong. Anyways, stick around. It's free. We do the show Monday through Friday. Fucking 8 hours a day, dude. Sometimes not. I'm sitting here with you right now on a Fed day. I want to be out drinking and hanging out and getting fucked by my wife. Seriously. I got a hot wife. She's smoking. Blonde, blue-eyed, and beautiful. Literally. I'd rather be out with her right now in a fucking James Beard restaurant partying, sucking down oysters and drinking champers and buying champagne for everybody at the bar. Because that's what I do. I'm known for that here in this town. So what I would say to you would be stick around. You can find everything you want for free. People will help you out along the way. And as you learn those rules with me over time, you're going to do one of 2 things. You're either going to burn all your money on zero dates, or when the environment is right for you as a seller or a buyer, you're going to be, as a sell the rip or a buy the rip, or buy the dip or sell the rip, you're going to know when to take your trades, where to put your stops if it goes against you, and you're going to know by velocity where we're actually headed over time. You're going to begin to learn that shit, and you're going to go, okay, this is where I make my money, and this is where I gamble and hang out with CaptainJimJames. Okay? Fairly simple. Fairly simple. Keep it simple. The simpler, dude, I got to tell you guys something. If I wasn't fucking streaming, right, my life would be so simple. This system is so simple. You can literally wait for it and then forget it. Set it and forget it. Set it and forget it. All right. I'll talk to you guys. I'm lucky, man. Not so lucky. I worked my balls off for that. My wife, man, dude, it ain't easy. I'm ugly. I had to be a nice guy. That's the only way I got her. I had to not be an asshole. I was an asshole when I was younger. I used to like to fuck crazy. I used to love the crazier the better. And I did enough of that crazy shit with them women, dude. No way. No way. I met her and I was like, that was the one. I'll be a nice guy for the rest of my life. What do I do? And she taught me and trained me to be a good guy. So but that takes a lot of goddamn work because I suck as a man. I'm a bad man. So I gotta I gotta try my best. You know, all the usual shit, loyalty, hard work, all that shit. And the key point is that she can trust you with children and you can take care of them. So I'll see all you guys tomorrow at 9:30 in the morning. Time's right now, 5 p.m. Hope you guys have a great night. Are we at bottom? No. Are we in sell the rip? Yes. Are the bulls holding on? Yes. Are the bears definitively in charge right now? No. I can't give it to them just yet. I wanted to see that low tick. It's not really bears. It's algorithms. It's software that hedge funds use and banks use to trade the market using computers. And so you're looking for specific things from those computers to tell you where the lie is. Understand? Hedge funds and banks use finite computing And they've been doing it and tracking it since the beginning of the stock market, before computers. Some of it's LA Wave, but computers are better. So you track the computers instead and use the LA Wave in the background. All right. See you guys soon. Tomorrow, hopefully more of you show up. Have a wonderful night.